All right, welcome everybody. Welcome to the session here today. My name is Rodrigo, and I'm going to be here with you and with Nic Chahine as well. Nic Chahine is the lead trader at the Benzinga Options Inner Circle chat room. A lot of you guys already know him from there. He's been with Benzinga for about 11 years. And basically, guys, we're going to show you a couple things that are happening, not just in the chat room, how we're trading it, but also talk about the strategy that Nic uses, right, to help all of the traders that he has in the room. I think there's been upwards of like 380 people there live at a specific moment because he does have a live trading room. And I'm going to show it to you really quick because that's where he is right now. 1 second, folks. All right, yes, and we're pretty much waiting here for Nic. He's gonna be here in about a minute or two. He did mention that he would be a little bit late because he is in the live trading room with the students, with the members, with the members. Some people do join for the education, but let me go ahead and just show this to you really quick. 1 sec. All right, so I think you guys can see this right now. And that's the live trading room, right? Now, let me show you where I think Nic is right now. 1 second. Let's go ahead and see what we can squeeze in here. So this is the live trading room, Monday to Friday, 9 to 5 p.m. live with Nic. Let's check it out. I don't know if he's here or if he's in the other session.
That was an easy win. And then we caught a couple of runs at the end of the day, and those were relatively easy based on data. Hey, Rodrigo, I'm getting there, buddy. I'm getting there. All right, I got to go. I got yelled at. Later. In 3, 2, 1. Thank you.
Folks, so you can see there that that's pretty much the live trading room. I just wanted to show you that because that is where Nic is Monday to Friday, 9 to 5 p.m. the entire day. You can see there's another live chat there, and you can send Nic a private message. But basically, we're going to get Nic here in about a minute or two. And just wanted to show you that, guys.
I'm here. I'm here.
All right, so I think we do have Mr. Nic Chahine in the house. So let's go ahead and give Mr. Nic here a proper welcome.
Good.
1, 2, 3. Let's go, Nic.
All right, cool. I don't know what's going on with my video camera. It does not want to work with Zoom these days. For some reason, it doesn't let me do it. It defaults to OBS software that I have. So I'm not sure. Oh, there we go. I can share myself. There I am. 1 second.
Yeah, so it was a pretty intense day in the trading room there, Nic.
It was pretty intense because on Friday, we didn't. It's not like I had a loss. We had. I usually predict where we're going to close for the day, and it's kind of a challenge, and I enjoy it. So, what I tried to do is say the price is going to be between here and here and the close, and they ran way too much. So today on the close, they tried to do something the similar thing on the downside, but I stuck to my gun and I posted in the chat room before the dip in like the first dip in the SPY. I said, if we dip below 388, buy the dip with a cheap call that's at the money, which was the 388 call. It was 70 cents, 65 cents if you caught the bottom. And for the last minute bounce, and it bounced to $1.40. So if somebody did 10, they made $700 right away. So it was a good win. So that's why, and then they got to repeat it. It was pretty good. So it was a good day. Good day.
Well, Nic, I mean, for those people that don't know, right? So this trading room, it's for people that are day trading, swing trading, and people that don't want to babysit trades that maybe have a full-time job or they're busy, whatever, right?
Yeah, it's the live room is for, I initially came up with it for people who can trade fast, but now it's become a hangout place to discuss everything. priority is to trade fast if we can. And I must have had 3 big explanations on concepts that you can use all the time, like calendars, diagonals, stock replacement strategy. I mean, that's not trading fast. Stock replacement strategy is for somebody that's stuck in the stock and they want to take the risk off the table, yet stay long the stock for free. That's a really good way. So I explained it and somebody said, I missed it. My volume was down. So I explained it again. So it's become a hangout and you don't have to be there all day. And here's the thing, if you cannot be there for whatever reason, I have another hangout, which is the chat room. And the chat room is static. You just log in whenever you want, at whatever time you want. Doesn't mean that I need to be there or not. I will get your message. You can either direct message me there or you just post in the regular strand. So if you're busy and you have a job, we have a place for you. In fact, we designed the program around you and everything else is extra. Everything else that came fast came like recently after the fact. The design of the program is to actually help people who cannot trade fast and that want lazy trades that are likely to hit without much work. So that would be the idea. And that is working as planned. Then we layered on new things, which includes the live room. Sorry, I'm still trying to close the day. So we do have a resource of things that if you're getting started, let's say you know nothing about options, we have a whole library of videos, modular. I refresh them every so often, but they are what I call evergreen videos. And the idea is that let's say you have a question, a big question about what are options. You go in and there's a small video about options. I encourage you to start there. And if you have questions, you come to me and say, Nick, I have no idea what that video, what portion of the video said. What do you mean by this? And I'll try to explain it. And then let's say you move off of what are options, what are calls, what are puts, what are spreads, what are credit spreads, what is a cash settled versus not cash settled? What does that mean? AM settled, PM settled, what's a diagonal, what's all of this? So we have a whole bunch of stuff. What's an appropriate trade? How do you find an appropriate trade for your speed? How to read my tables? It's all set up, tailored around one thing is to actually make you understand the opportunities that are presented. And there's about one a day. Today I'm going to be late delivering one because I am here trying to get more people to join the program. The videos, the trade setups that I share during the week are designed for people like me. I'm a slow trader. I'm busy during the week. I don't want to do this busy, in, out, in, out, in, out. So first thing in the morning, the market opened up. I was chatting with 285 best friends in the room. And I said, I'm going to short the pop as soon as it opens. Before the market opened, I said, I'm ready to short it. By short it, I mean, very mildly say, you know what, we're going to open at the top end of things and maybe drift lower all day. That's exactly what happened. I took my risk at 3990. And the idea is to set a trade that suits my speed. I didn't have to look at it again all day. I didn't look at it once because I knew it was safe out there. So it is very important to find what kind of trade works for you. And don't take other people's trades just because you feel compelled. And hopefully I'll give you enough trades to pick the ones that suit you. So the set of trades, the set of videos that are there, I think one of the videos, it says finding an appropriate setup that works for you. First thing, you have to admit your time frame. Am I fast? Am I slow? Can I check my browser once or twice a day or once or twice a week? So then if you cannot check once a day or twice a day, then you shouldn't take trades that expire that same day or the next day. You should take trades at least a week out. That's what I do. If I can't be nitty gritty, like if I'm going on vacation in a couple of weeks, so I'm not going to take trades that expire during that time because I know I'm not going to be able to babysit them. So I either will do them like a few days expiring before, or I throw it way out there so that it can get in trouble while I'm on vacation, as long as I set it up properly. So it's very important not to get yourself in trouble because of time. Okay, so today, do we have a format? I didn't pay attention to the name of the setup today. What are we educating on today, Rodrigo? Help me out.
Right, so it's very important as well, like the whole volatility in the markets. I tried switching over my microphone. I don't know if you can hear me there.
I can hear you just fine. There's no issues.
You're good? Yeah. So basically, I mean, look, you're helping traders with all this stuff, right? Trading, finding the right type of options trader that they are, right?
Yeah.
But when it comes to education as well, I know that you put a lot of work into that too. Can you explain a little bit, where is this education for all the people that just joined, and how can this really help new traders out there that need help really?
Okay, so the education piece is important, that when you read something from me or you watch a video, I try to put out a video with every trade. Last week, I got bogged down for time. I chose not to. Plus, I got feedback that some people needed just direct statement, do this, do that. And I'm trying not to do that, because I would like to teach the people that want to learn. So the education part is, I think, gets best accomplished in the chat room, because I can share whatever I share. And then somebody has a follow-up question and they go into the chat room or the live room, whichever, and they message me and they say, can you elaborate more on this? I must have answered. Somebody today asked me, how do you come up with these lines on the fly this fast? That's because I answered them like 100 times a day. And when I say 100, I'm not joking. I'm not joking. I'm here from, I don't know, 5:30 at chatting with people from 5:30 in the morning, my time. And here I am. It is now 1:12 and I'm still chatting. So it's a full day of working with people, trying to help them out. Now, if they cannot be in the live room, they still have me in the chat room, and they come in and say, you shared a trade the other day. How do you handle that? Like somebody came to me, I shared a trade for Intel before the correction a couple of weeks ago, and then it fell. Well, when I set up the trade, I set it up at a level that I knew that I would take it. No issues. The heat, I would take it. So they came to me, what did you do? Did you panic out of the trade? I was like, no, I told you when I took the trade, if it comes to it, I'm just going to take the shares. And it bounced off, trade is fine. Right. And then the other day I took an iron condor. If you don't know what that is, it's easy. We teach you a trade that does not need a rally or a drop to win. And price pressed up against, threatened one side of it. And somebody, Ben, came to me and says, what are you doing? What are we doing? Are we closing the top end? I was like, I'm not closing the top end. I opened it as a unit. I think I can still deal with the heat right now. And that turned out to be a winner as well, because price turned around lower immediately thereafter that point in time. So the education piece is the most important part of it, is that you drive the speed with which you want to learn. I'll give you an example. Let's say you had a busy work week, and you could not pay attention to what I'm saying. No problem. You can tune me out. You wouldn't miss a thing, because it's not like you missed a chapter. Now you can go back. You can't go back. You're going to get my emails and notes and posts in the chat room. So I'm pretty sure you're going to have 10 minutes to log in and check your email, or log in and see what I posted.
By the way, Nick, I want to give a big shout out here to Kulpreet. He signed up here a couple sessions ago. So he says, hi, Nick. I love the way you present. First engagement was so impressive in the live session. Man, that's really cool.
I have a few fans that I adore. I mean, so I feel good about it. So it's rewarding from that perspective. But I can see the results. I mean, I have tangible proof in the room. Like, I have at least a dozen people that actually made money this afternoon because they were able to be in the room. But that's the same way it translates out. Now, if somebody takes half message and doesn't listen to the rest and just looking for an immediate trade alert, where is the trade alert? If you sign up and you ask me, where are the trades, instead of where can I learn something, I'll be a little bit disappointed. You should focus on the learning element. And because I can provide a lot of learning, because I learned it myself through scars. I am not from Wall Street. I haven't taken one class from Wall Street. I learned it all through trial and error. When I was doing options, there were only options on the indices, and they were all AM settled. And then they added 20 stocks, and then they started added weeklies for indices, and then weeklies for the stocks for some. And now everything has a weeklies. SPX expires every day. Thank you, Lord. This is the biggest gift ever. So now I trade once a day, make my bet in the morning, and I'm done. So you too can do that, by the way. It only requires $500 if you want to do one trade with one contract. The reward can be either 50 or $100. So it is important to approach the offering that we have from an education that where you drive the bus. If you want to take off for 2 weeks, you're not missing anything. I promise you. I will be here. There will be 1,000 trades available. You have a whole year to do it. If you're committed to becoming a better trader, I can promise you, you will get there. You will be a better trader leaving my program. Hopefully you won't leave. But 6 months into a month into my program, you will be a better trader. If you jump into the live room, I can guarantee you results within 2 weeks, that you will understand more things in plain, simple English, because I didn't learn them. Like if you tell me, explain to me gamma in plain, simple English, I would, but or delta, I would. But if you tell me, read me the definition, I would have to Google it. But I know what it says, and I know how to use it. I know how to make it how to have it make money for me. But who cares if I can define it properly in their terms, which is total BS, by the way. For example, I dare you to go read the definition of a delta and tell me how you're going to use it. Go ahead. The delta definition is something like, it is the amount of change that happens to the option given the $1 change in the underlying. That's roughly what they say with the delta definition. Or I can tell you it's your odds of winning or losing. Which one is easier? Yeah, you can go read that other definition and try to delve into what the hell does that mean? Or what the heck does that mean? Or you can say, oh, these are my odds. Okay. So now if I buy a call with a 0.1 delta, it means I really don't have a chance of winning, but like 10 or 12%. Yep. Oh, then I won't buy that call. Yep. Okay. So buy a higher delta. If I'm looking to sell a put spread, I better sell a low delta so I can win, so I can flip the odds in my favor. How are you going to play if you can't skew the odds in your favor? So simple things. I promise you good results. I promise you. So we are dedicated to education first. And if we can make provide trade setups that will win, that's great. It's hard to be bullish. I want to be bullish more so than bearish. And it's hard to keep catching falling knives in this environment unless you're doing it the way we do, which is credit put spreads, for example, and some iron condors. Not everybody can do that. So I do offer the alternatives. But because the definition by the statistics say that most options expire worthless, right? So if you're buying options strictly, you better be darn good at timing. Otherwise, the statistics say you're going to fail. Most options expire worthless. If you only buy them, you're going to statistically fail. That's why most options traders lose all their money, because they're only buying stuff. And unless you're really good with the charts or following somebody who's really good with the charts, you're at a severe disadvantage. So what I try to do, if I had my choice, I would never buy an option ever. I would just sell, sell, sell. You want to buy a call, I would sell it to you. It depends on where it is. You want to buy a put, I will sell it to you. It depends on where it is and what it is. Like some charts I don't touch. If you tell me, oh, you want to sell a put in Hyliion? Nope, I don't want to own it. I would never sell a put in it. So I prefer to sell a put and say, a company I don't mind owning. I got stuck long Hood because I made a mistake. I sold puts and I forgot about them, and I got assigned 100 or 200 shares. So I guess today I'm making some money, but I'm still red on it. So I do make mistakes like that, but it was my own account. So we all make mistakes, but I usually don't sell a put unless it's a stock I want to own. So the education piece is really what you should focus on. So if somebody joins today, ideally you log in to your account, you go into the chat room and you say, hey, I just signed up. And then you get the information. So every day I share 2 write-ups, one in the morning, one in the afternoon. Today in the afternoon, I haven't done it. I'm running behind and we're doing this. Somebody had a question about Enphase today, what is exactly what they're showing, a detailed question from Ryan. They had a chart, they had a question. So I tried to answer it as best as I can. Earlier in the day, they had other questions about other things. I think over the weekend somebody left a call spread expire in the money on Shopify, and they wanted to know. I made a comment as to I wouldn't do that in the future, and they said, "Why not? I mean, the broker will do it for you." I said, "I don't want to trust the broker to do it for me. What if the broker doesn't do it? Then I'm stuck." Wait, stop right there. Stop. No, lower. That right there. That chart right there. That chart is from Katya. Okay, so Friday she saved our butts because I was reading the tea leaves like I usually do, and I'm usually bulletproof with that, except for 8 weeks ago, something happened on a Friday, and it happened this past Friday, where the buyers rally, which is fine, and then they take it a leg extra at the close, and that's Reddit. They did it like 8 weeks ago, and they beat the market makers Friday as well. I would have fought and shorted if she didn't jump in and said, "Guys, no, I see 39.30 coming in the next few hours," and she got her 39.30 overnight. So because of her warning, and she's a specialist in what these are called pitchforks. So she got educated with pitchforks, and she said, "My pitchforks tell me that," I know it sounds funny, "that it's going higher." So I left the door open to everybody in the room, 300 people. I said, "Listen to Katya. Maybe she knows what she's talking about with this." Guess what? Thank God for this, because she saved our butts. So we're a team. We're better together. We make fewer mistakes, and we are learning new things. So I got to educate myself a little bit on pitchforks over the weekend. I didn't go very far. I thought I did, and I was watching this video from this one guy who sounded amazing, and then he made one change, and he didn't explain how he changed it, and frustrated me. I was like, ugh. So you just said, "I'm going to modify this," and you just dragged it from here to here, and he didn't explain why. And I was like, okay, I just wasted my time, but I will try again because I saw results from Katya. So the write-ups are there. Saturday, you give me tickers. I do the homework for hours. Sunday morning, I share those homework. 148 tickers this Sunday. 2 hours and 20 minutes.
Session is Sunday, right?
The session Sunday. You were just on the list.
Yeah.
A list of 146, 148 tickers. I can't remember. Organized, clickable, content, everything. How long will it take you to type this list? Okay, so never mind me copying, pasting, putting in, uploading, downloading, and sharing it. So there's no short of effort on our end to give you value or perceived value. I promise you, you will not be disappointed. And if you are, they will give you your money back. I'm twitchy because my neck hurts. I apologize. So the education piece, number one goal. Me sharing trade setups, great. That's what I started for, so I still provide it. But I think I'm doing a better job making better traders and making you fall through fewer pitfalls. So turn off the news and you'll be a better trader.
And I was talking to a couple new members from today and yesterday, and they just didn't believe me when I was like, "Listen, Nick is there Monday to Friday, 9 to 5. I'm being dead serious." They're like, "No, yeah, I know people just say that, you know."
No,
it's like,
I'm there, and I'm trading, and I make mistakes, so I trade less, so I don't make mistakes. So then I started saying, I will track the data, and I won't take the trades, so I'm not emotionally involved. So that last trade setup, it was 70 cents, 65 cents, 70 cents to buy the call. I didn't buy it because now I was focused 100% on watching the data and watching the price action and watching the chart. And it was a 15-second chart. So I was watching like bulletproof, zippy charts. 15-second charts are very active. They drive you crazy. We went down to 5 seconds at one point. And I said, we should close above 388. I was emphatic. And thank God we did. We bounced. And I drew. Can I share?
But really quick here, though, just want to go back here to the YouTube chat. Cypher, Nick is legit. He works hard and knows charts better than anyone.
Oh, Cypher. Cypher, amazing chartist. He's in our room. He got my back. Okay, enough said.
Yeah, Mary Trade says hello as well.
Yeah, Mary killed it twice today. And last minute, she had an extra topper trade. But these are active traders. You don't have to be. But the learning that happens in there at fast speeds, the concept is the same at slower speeds. So if you come in, you can see the cycle from spotting a trade, taking a trade, tracking it, and booking it. Same concept. If you see it happen within 5-10 minutes, half an hour, a day, and then suddenly it clicks. Oh, okay. So that's what you do on a longer period of time. There's support, there's resistance, there's entry, there's stop out, and there's targets. So it's the same, whether you're fast trading or not, it is the same setup, I promise. Plenty of learning. That's what, I don't know what Cypher is doing here. Go home, go do something else. But I appreciate you being there. So I guarantee you he's not learning anything from me here. He's just here in support.
Yeah, then we have our buddy here, pretty much Cypher. Again, no one better than Nick. But I think this is a different Cypher.
Oh, you know what? We did have a Cypher for a while there too.
There's a couple Cyphers there, definitely. Yep. Mary Trade says, you guys meet the world's best trading teacher you've ever met. Everything simple and easy. Well, I mean, I guess that's kind of really why the learning was pretty, I mean, it was the same. I had a pretty, steep on the upside curve learning when I saw those videos that you have there, Nick, like what's a call, put, spread, the definition, because Wall Street makes it very complicated. And I guess you pretty much like simplify everything overall. That's the main message, I feel.
So, plain simple English, logic, simple logic. Like we shorted oil with conviction, with strong conviction at the top. I said, I don't believe the story they're telling us. So we shorted oil, Oxy, Exxon, and the USO. And you saw what happened, the devastation that happened in the oil in the last, from the top. And now they're bouncing. They're saying, what are you going to do with oil? Buy the dip? Heck no. I'm just wishing they rally again so I can short them again. Because we did some logic. I presented the video and I said, here's what I'm doing. Feel free to follow me. The risk is I'm just buying a simple put. I'm not shorting outright and risking everybody's money. And it was a 166 put on Oxy, I believe. And Exxon was a 95 put or a 98 put, something like that. So it is simple concept, simple logic. Here's the message you're telling me. I don't believe it. Why? Because blah, 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 blah. And I offered, okay, so what am I going to do about it? I think I'm going to pick a fight with this stock or this one or that one. Don't do all three. I did all three, but at different times. So whoever picked Oxy, they made 5-6 times their money. I only made 3 times my money because I stopped out early. Same with Exxon. I stopped out early, but I still made 2.5-3 times my money. The credit call spread in the USO still played out fine. No issues there. So we are not like binary one way. We are open. We look at an opportunity and we try to take advantage of it. Like Facebook, Meta. 4 setups, I think, 4 bounces that I've traded already because it fell and the PE fell to below Exxon. That should never be. A PE of a company like Facebook that's killing it should not be 12. Okay, that was way too low. So I said, I'm going long based on that. And then sure enough, boom, big spike. And then it dips again. Okay, I'm going to repeat what I just did before. Spike. And then recently, I think last week, I took another trade that also played out. We took a long on XBI last week, the day before it spiked. And maybe it had already started spiking, but I said I was going long anyway. I missed out on a few, maybe 20 cents of run up, but that was a longer term swing. So we're not taking mad, crazy risk. We can, in the live room, we can do that. But I'm not going to hand somebody a trade that could lose them a lot without good conviction. Like right now, I'm sweating it because I need to provide a trade setup for a group of you out there. And there's so many questions to the pros. I'll give you an example. The VIX, have you heard of the CBOE volatility, the fear index called the VIX, VIX? It's at 28 or whatever. I didn't look today. The only reason it's this high is because the market makers who are in control of the market basically are nervous. So if you're selling somebody insurance and you know they're a crazy driver, you're going to charge them more premium, right? If you know that they are a grandpa or a grandma that drives like 2 miles an hour once a week, you're not going to charge them as much as a teenager, a boy teenager nonetheless, to use the typical statement from insurance agents. So why do they do that? Because they want to create a buffer, because they expect drama from a teenager driver. So the market makers expect drama from the markets. So everything in the options world is more jacked up than normal to make up for that question mark that they have. Well, if they control the market, have question marks, shouldn't I have question marks? That's why I'm saying all of my trades right now, very few are investments, because you cannot have that much conviction to go all in on anything. You can nibble, but you can't be all in. So
Right.
now I label them tactical trades, meaning limited risk, leave room for error, be humble with the conviction. Don't be so, it's going there, I know it, I'm going to buy a naked call for Tesla for next week. Where do you get that kind of courage? You know, you might hit a home run, but you might also lose 40%. So you better have a good reason.
Right. And what's this trade from Mackie Watson? Book profits on the SPY trade. Thanks, Nick. What's this
Okay,
trade?
so if you scroll up, maybe you don't need to. Okay, right there. You see that first sentence right there, Nic Chahine? If I am right there, if I'm reading the tape, if SPY dips too far below 388, the SPY hadn't already dipped yet. I said, if it dips, I will buy a call expiring today, betting on a rebound, right? And guess what? The SPY dips below 388, goes to the low end of the 387. They jumped on the call I said I would buy. They got immediately doubled their money. So I don't have to, this is somebody that is not in the live room. This is the regular static room. So
what would be the difference between the live room and the static room, you would say?
So the difference is the static room is not intense. You pop in whenever you want, at night, at work. So it's me providing you the opportunity to have access to talking to me at your schedule, and not be so pressed. Oh, I got to be between this time and that time, and there are 300 people in the room. I'm feeling bogged down. This one, the one you're looking at here, it's like Discord without the noise. Have you ever used Slack or Teams? It's like a place where teams communicate without needing to go through email and without the pressure of being there at the same time. So it is totally designed for access. You accessing, if you have any follow-up questions, any questions in general, you have a place where you can jump in. I hate emails. And imagine with thousands of people that I have with Benzinga, it would just be a nightmare, right? Thank God for this, because then I have a long list of DMs I can deal with one at a time. You don't want to discuss it in plain sight of everybody else. You just hit me through a direct message and say, hey, I'm in a pickle. I bought the stock. Oh, somebody today forgot the stock. They're in a jam in the stock. They got assigned at a higher price, and they're $40 below current price. I want to say $238 was their base price, and now it's like $190. So they came to me asking what kind of call can I sell. The trade was not from me, so they had that trade on their own. So they said, how can I deal with this call? It was Meta, I think. Anyway, so I said, let me find you a call you can sell. So I found them a call they can sell out in time, that if Meta spikes, they would be out with a profit. But at least meanwhile, they can have the opportunity to make some money while they're waiting by selling a covered call. So if you own stock or you own a call, you can sell something against it without creating extra risk. So it is, thanks to a room like this, you would have the ability to come and say, you know what, I got myself in a bit of a jam. I have no idea what to do. I got to sign this. What do I do next? And how do I get out of this call? So I don't have the answer to every situation, but I have seen enough carnage in my own account when I was starting out that I probably have seen it before, and I've seen a few things that you have not. So we can address those one at a time. The communication piece is that solves that problem.
Right, right. Really quick here, Nick, because I do know that you want to get into some hot topics in the markets, but I'm getting some questions here from the viewers. So I'm just going to roll through this really quick and we can get all on it. All right.
Yes.
So Ricardo, good question. Where's the chat? All right. So we're going to go through these questions really quick, guys. Again, these are questions from all of y'all in the wherever you're watching this. So does Nic Chahine go over the member trade ideas? Yes, that happens every day. Are the sessions on Sundays recorded? Yes, and they're posted in the chat room too. Does everybody that joined get a free laptop? Yes. What is the chat room schedule? It's Monday to Friday, 9 to 5 p.m. and Sundays, 10 a.m. Eastern till noon. Is there a money back guarantee? Yes, there's a 7-day money back guarantee. The price at renewal is the same as it is today, next year, and so forth, 70% off. And is it
That's
mobile?
crazy.
Is
That's
it mobile?
crazy.
And the last one here we have is it mobile user friendly? Yes, as long as you can use Chrome, you have Chrome or whatever it is, any browser you can pull up. So I think that covers everything. It's an options room, but Nick has added a lot of other things there. Crypto has become pretty open-minded there with what he's doing in the chat room, right?
Yeah. So somebody is posting that Nike is up about 2% in the after hours. It fits the options. So they asked me to guess as to what Nike would do. So I've gotten pretty good at reading the options. I said it's not very reliable when it's on Monday and there are 4 days till expiration. If it's on a Thursday, then I know every options position is for the earnings report. So on Monday, I said, nevertheless, I said there's very little reason to do much. It has support, good support, and much better support lower. It has some resistance, but not enough to stop it. So I guess it would be easier to go up a little bit, but I don't think it should go up a lot. So they're telling me it's up 2% after hours. So it's not surprising. I said, I don't have enough data to trade it, but that's what I'm reading from it. So it's important to know when I cannot provide information that is tradable and disclose it as such. Sometimes I'll say, I see a reason to go up this much and go down that much based on the open interest, because it is bulletproof information. Look at that. Red says, by the way, what you're looking at, that Red comment, Red, I think, is on the West Coast. He pops in around, I am too, pops in around, I don't know, 11 o'clock our time. Good morning. I was like, good morning. It's like even good afternoon here on the West Coast. So I call him second shift. But he comes in and he posts his trades and he posts his results with pictures. So he says another green day because of Nick. So all I'm doing for Red is providing the range within which we should play. By that, I mean, I have a good feeling as to what should happen based on the options. Believe it or not, even if you don't trade options, you should learn how to read the options tables. I'll give you an example. Let's say you're talking to your friend or family member and they say, oh, I bought Apple stock. And you say, why? They'll say, I think it's going to go up to $180 in September. And then you say, let me tell you what the market makers think of that opinion. And you can go to the options table and give them an exact percentage of what the market maker think of that opinion. And it'll probably say there's very little chance Apple will be at that price in September. I'm just saying. So, or you tell them, oh yeah, you're right. You have like a 40% chance or a 30% chance, but that information exists in the option tables. So even if I didn't trade options and I'm trading equities and deciding how to manage my portfolio and how to hedge and all of that, there's a lot of information in the options table, especially that now we have 3 SPY closes a week. The SPY is bulletproof information, bulletproof. I've I've misread it twice in 2 months, twice, and that's every day. So the information in the SPY options table is gold. If you trade intraday, you're gonna love it. I guarantee it. You're just gonna love it. It's total fun. And if you are trading the SPX, you have the opportunity to do that once a day. Expiration, bet in the morning, done. So I'm done. I traded first 3 minutes. I placed the trade and never did anything all day. I helped everybody else. I placed the trade at the open, got my fill, A lot of people followed me. Somebody got way more than I did. I was like, how the heck did you do that? He said, I had my order from before the market opened. You said we were going to open up. Sure enough, the open spike gave him a better trade than mine. I made the comment and I opened my order after the open. He saw the comment, he placed the order before the market opened, and he got the fill. So if you can't trade fast, that's okay, but you will learn. You will learn. And here's the thing: the SPX, that's the easiest way to make money right now. Because we don't know what the markets are doing, so why not just take a bet for like 6 hours and be done with it? The SPX is cash settled, so there's no assignment. Okay, so if you have a smaller account and you go to try to do a put spread or a call spread, even if you buy it or sell it, it doesn't matter. And on expiration day, your broker, if you have a small account, your broker will come and close the account, close the trade for you. You look at your portfolio, where you go to close your profits, and the broker just closed it an hour ago. In the afternoon, they have a risk desk that goes down and close your account, close your orders if they expire in the same day. But they won't do that in the SPX because it is cash settled. There's no assignment. You're not going to wake up owning shares of SPX. There's no such thing. It's an index. So I use it by selling a spread. I collect X, and if price stays below my risk, I win. Today, it was 3,890. What was the price today? I'm drawing a blank here. Let me see here. SPX. Okay, 3,990. I took a risk at 3,990. So I would have lost if the SPX went to 4,000, basically, which is not likely. But I placed the bet first thing in the morning when everybody loved the market. I was like, oh, okay, I'm going to sell you lottery tickets right now. So I collected, if I did 10, I collected $500, $600. And all I had to do is just wait for time to tick and the bell to ring and SPX below 3,990, and I win. That's it. I didn't need a rally. I didn't anything. I sold a lottery ticket for somebody that was super happy about the market when it opened up. That's all I did. And guess what? And then the market dipped. I could have done the opposite bet and collected another $500, $600 from the bottom, which somebody did. Ooh, wait, where did it expire? Somebody had placed the bet. Ooh, they missed it by that much. Anyway, so the idea is to try to make as little effort as possible, put as little at risk as possible, and be very realistic and don't make guesses. 3 people asked me today, what do you think tomorrow will happen? I don't know. So I look into the open interest and I tell them, based on the information, we should be in this range, but I can help you manage tomorrow, the action, and make money off of it. So I can't tell the future, but I can tell the bumpers. So I can tell that this is too much, this is too low. If no headline comes out that changes the baseline of things, we should swing between the two. Like at certain points during the day, statistically speaking, there becomes, at one point, there'll be 75% chance that the range for the day is set. At a second point is 95% chance the day is set, meaning most times within the first 2 hours, you already have the high and the low of the day. So all you have to do for the rest of the day is not chase at the high and not capitulate at the low, just ping pong in between the two. And if either of those sides breaches, chase it in that direction, up or down. What's up?
Nick, and a quick question here from Antonio Spain from the Zoom chat asking, do you help with Forex, currencies, that sort of stuff?
If it has a chart, I can help you. I don't trade currencies, so you would have to get your pairs straight. I trade crypto, which is pretty close. But if you know your charts, I can help with charts, but I'm not a currency expert. I have shorted the dollar very profitably for us twice, and I'm waiting for a second pop to reshort it. So from that perspective, I do it through an ETF. But for me to help you set up a pair trade between US and Swiss franc and things like that, I'm not the guy for that.
Right. Okay. And then when it comes to crypto, what do you help folks with crypto for?
Okay. So crypto, the easiest thing I did in the last couple of weeks, crypto had a bad weekend. Was it last weekend? Not this weekend, the weekend before that. So I was chatting with people and I said, I'm buying some Solana. So the crypto in November, I did a video. I said Bitcoin should go to 22 to 19, and here's how it's going to do it. And it did it exactly how I said it was going to do it. I wasn't a genius as to, it was just a proper price path for a broken Head and Shoulders. That's it. And they lost the neckline. They tried to recover it. And then they lost the secondary neckline. They tried to recover it. And then they lost the last neckline. And they were at the target, right? So they said, are you loading up? I was like, hold on. I was going to. That's what I said. But I then saw somebody else who I respect share a possibility of $9,000 Bitcoin. And I respect them enough to say, okay, so maybe I missed something. I want to give it some space. So what did I do? I looked at crypto, and the best coin that I like, which is Solana, outperformed everything during the tough times. Everything was down 30%. It was down 10 to 15%. So I bought Solana at 27.3 or 0.4. It went to 42. I think it may be down a little bit today. I'm not sure. So if I was just trading, how much is 27 to 42? That's a pretty big win, right? And when I said I bought it, I shared the idea with people. And some people bought it with me and other people didn't because they're hesitant. So I tell you one thing on crypto. What I'm going to give you a few seconds to think about it. What is the riskiest part of investing in crypto, Bitcoin, crypto, whatever? Let's call Bitcoin. That's the safest coin, right? Bitcoin. If Bitcoin's gone, everything's gone, right? So the safest coin is Bitcoin. What is the riskiest part of investing in Bitcoin? I'll give you a 10-second heads up for you to come up with that, because I want you to think about it, and you'll be surprised at my answer. It's not what you think. So the scariest thing is not the price, that it fluctuates up and down. The scariest part is where you put your money. So you choose a trading platform overseas. You think it looks good, somebody recommended it, and then the platform gets hacked or disappears, takes your money. So it's not the fact that Bitcoin fell. Every crash in Bitcoin was an unbelievable opportunity to get long, right? So don't sweat that part. Just don't buy all in at one time. So the risky part, it was for me. I'll tell you the truth story. I opened several accounts. I didn't know where to start. I asked a few people, my members. I have 2 or 3 members, one of which pops into my head, Manal. She was amazing. She gave me her experience. And I said, so I opened accounts in all the ones she mentioned. One of them was Qcoin. I didn't feel comfortable. Felt like I was walking into a casino, so I didn't put money there. And the one that I felt comfortable with was crypto.com. Not because it's best. The app is crap. You don't have a desktop, but it does the job. I mean, I just want to buy the coins and be done with it. And I like the fact that they actually report me to the IRS. So if I do trades, I'm going to have to report them if I made money on whatever. So I guess my comfort is that they do have a relationship with the US government to a degree. They're not based here, but they're targeting us as a profit center. So it's in their best interest to stay here. I felt comfortable. So I chose it, right? So that part is out. But let's say you're a complete skeptic and you don't want that part. Simple. You can use Bito, which is a chart you can use. You can use that through Schwab, TD Ameritrade, whatever, E-Trade. And you eliminate the riskiest part of Bitcoin trading, which is putting your money in some ABC company. So now your money is at Schwab, Fidelity, and you're trading something that's listed here that's tied 1-to-1 to Bitcoin. And so if you're trying to buy the bottom of Bitcoin and you bought 1/3 of your position in Bito, that's what I would do. So right now, if I wanted to get involved in crypto, I would buy a little bit of Bito. If you're thinking you wanted to own 500 shares of Bito in the end, I think they're $12 now, $12.50, $12.70, something like that. Then buy a nibble, buy 1/3. And then if it crashes to 9,000 Bitcoin, so Bito gets down to like 8 or 7, add some. And then when you're comfortable, add some more. Never all in, never. Who's got that kind of conviction, especially with Bitcoin? But I promise you that the funnest trades I've done this year and last were from crypto, the funnest trades. So I'll tell you my history with Solana. Solana is a coin. So if you've done banking, you've sent wires. You send a wire, it goes across a network of financial institutions. I think the biggest one is called Swift, and then they charge you $30. And it takes time. Sometimes they get lost, and it's a hassle. You're going to make a phone call. Blah, blah, blah. Last time I did it, it was like that. So in crypto, if you do a transaction, it has to go through a network. And right now it's Ethereum. And when it goes through the Ethereum network, you pay fees in Ether. They are coins. So Solana is a competitor to Ethereum, a lot faster. They have their own shtick of proof of history versus the proof of stake and whatever. So it's a lot faster, more efficient. Some people say more volatile. I don't agree. But anyway, so it's an up and coming network. So I think there's enough room for both of them. And the Solana trade that I did, the first time I bought it, it was at 140 something, 144, $144 a coin. It went to 170, 190, 192. I got out. Like, ooh. And then it went to like 210 or 220 without me. And then it fell back down to 170. I bought it. It went to like 240. I sold it probably in the 220s. I don't remember. So it was 2 good wins. And then it fell to 50. I was like, holy crap. I bought it so high. I got in at like in the high 40s. And I just tripled down on at 27. So I'm green already. And I'm happy. So I could book it again. But this was the design for me to get in tranches, once somewhere around 40 and see if it stabilized. It didn't. And I knew I was going to add more later. So it's not like I'm adding to my risk. That was my risk that I broke up into pieces. And I still have a giant pile in cash. Well, giant, waiting to get into. I'm praying for a Bitcoin crash like it did before. And let all the naysayers come out and say it's going to zero. I'm not a Bitcoin rah-rah guy, but I don't like the way they treat it. Like it's garbage. Dude, it is the best performing asset, bar none, for 10 years straight. And you still have the guts to call it meaningless or a bad holder of value. I don't get it. You need a new calculator. That's what I think. So.
Well, I mean, yeah, you're right. Crypto is in a very tough spot, Nick. So I'm not sure if can you go ahead and share your charts here so we can, you can, kind of take us through the markets, through the motions, what you're looking at in the markets right now.
Sure. Let me share the screen here. It's going to steal it from you. Is that okay?
Yeah, that's fine. Let's do it.
Okay, let's do it. We're looking at, can you see SPX? All good?
Yes, all good. All good.
Okay, good. Yeah, because the other day we had issues. All right, so first of all, let's look at the SPX, go to 1-day chart and take out all the pictures and just think out loud. Take this out. So this is a daily chart of the SPX. Every candle is 1 day. Everybody's used to seeing that. Nothing fancy about it. You can totally tell visually that at one point the bulls were in charge. At another point, they were fighting over control sideways. And now there's clearly a descending channel where the bears are in charge, right? So this hasn't changed. These candles on the way down are as violent as I've seen in years. And if you scroll back, you will not find ones like them. Maybe these up channels like this. But you look at even these were different. This is the pandemic. So we shut down the world. And these right here that just happened, look, gap and a giant red candle, giant gap and a giant red candle, giant gap and a giant red candle, one green candle and then 2 other giant candles. That is violence. It's like, and with nothing changing except words out of a mouth of one guy, Powell. He said, not so many words, but that's what he meant. I'm here to break the economy. I cannot control supply shortages, so I will destroy demand. That's the only way he can kill inflation. There's inflation because there's not enough of stuff and everybody wants to buy it. So they're willing to pay up. You go to buy a pickup, it's $100,000 for a pickup that used to be 40 and 50. There's if you buy electronic equipment, everything is expensive because of shortage of this and the shortage of that. How do you fix shortage? You destroy demand. So he cannot raise rates. He says he wants to, he cannot. If he continues to raise rates, he's going to create a balance sheet problem. There's going to be insolvency, I think it's called, where you can't service your debt anymore, even though you're a profitable business. So he cannot push the envelope. He can threaten. That's why he's talking so tough. If he continues raising rates, I think he's going to have to cut rates again, like he did in 2018, and have a rate cut by January probably. Or anyway, this week we'll get the GDP. So we'll see if he's done damage, and we'll see how the rhetoric changed from him. So far, he's as nasty as can be, and he caused this. So now, what can I make? Forget words, forget fundamentals, forget opinions. Let's just go with the truth. This is the price action, regardless of what caused it. It's like somebody today says, why is Netflix rallying? So I look at Netflix, it was down 1.4%. I was like, what do you mean rallying? It's down more than the market. Well, it's off its lows. I said, you didn't ask me on Friday why it was up 7%. So why are you asking me now that it was down 7%? So perception is everything. Right here is the truth. Rally, sold, rally, sold, rally. It's going to get sold. From what point? So how far do I chase? I give it room. And I think we get to here if we do, and then we come down. Now, how do I note the change? There's going to be a handover from the bulls to from the bears to the bulls. How does that happen? By when you get sold on the rally, you don't set another low. Like here, rally got sold. They came back to the place. It's better to show you with a pen. Rally. And they sell it down to base, and they can't hold the base. It becomes a problem. They try to recover the problem. They can't. Okay. Meanwhile, they place another rally. So people who bought it here are not in my room because they didn't look left. And that was the problem area. So they bought here, they got stuck. Then they get this. They can't hold here. They fall. Here they are trying to recover the problem area. So if the rally gets to here and they come down and they don't get to here, they get to halfway, and then they come back up. Sign number one, change in behavior. Not emphatic proof, change in behavior. Now I have a higher low. Whoops, sorry about that. Sorry, that was a hideous line. Higher low, lower high, fine. So now they come to blows, higher lows, lower highs. And then you decide, you drop one more time, and if so, how low? And if you stay above this one, that's still okay. And eventually you overcome one giant level. Oh, now suddenly you have a trend of higher lows, higher highs. So you bottom in a U shape, not these stupid V's. V's don't last. You build a good base and you come out of it and you build a nice ascending channel like this, you're going to go far, and you'll beat one tough level at a time. So I feel like John Madden, boom. So, it's very simple. So the big picture is we're watching to see what happens in this zone. There's going to be resistance. There's going to be the urge of selling. How far down do they come down? And I would love them to stay above this one, although this will be okay. Suboptimal, but okay. And then they come back up here, and then we'll see what they do with the place from which they fell. And if they take that out, they'll pop over. They test it for footing. Oh, okay, now we can go up and deal with this problem. Pop above it. Test it for footing. Okay, now we can go up and deal with this problem. Suddenly you have an ascending channel. So that's what I'm looking for here. So what can I do? I can take risk down here, sell a put spread, take risk up here, sell a call spread, and let time do the rest. And now I have to modify it. If I'm long stocks, I don't do the put spreads, sold put spreads, because they're bullish. So I would short them, short the indices, mildly short them, sell a call spread. Like I said, if I'm long a whole bunch of stocks, this week, I would sell call spread for tomorrow, for Wednesday, for Thursday, for Friday, and just manage the time. And each one of those trades would have an 85% chance of success. And if it wins, it brings me $50, $100, $500, depends on how big I play. So balance your books. Somebody said they wanted to buy a call in Tesla. I said, what is your thesis that you have so much confidence that you want to spend $2,500 for 4 days for one call? I'm great with charts, and I can't get myself to doing that. So they had an excuse. I said, how about this? And I offered them an alternative that costs much less, that would benefit from a stall this week or a small drop, that would keep them long Tesla for longer without as much money on the table. They like that idea. So they may have done it. I don't know. Another ticker was Boeing, somebody else, they wanted to say, oh, I want to swing trade Boeing for 2 months. What do? I said, well, they said they wanted to buy a call. I said, I would rather buy a call spread. In fact, I told them I would buy a call spread out in time whenever they wanted. I forgot, maybe August. I can't remember. Let's say August. And I would sell a shorter term iron condor. Why? Because I'm confident of the support. I'm okay with the resistance. So I'll sell an iron condor where I need BA to stay in between. But just in case it spikes to high heaven, I'm long out in time to cover this problem. So I'm buying something out in time, and I'm selling something up close that helps pay for what I'm buying out in time. So if it does nothing for a while, and then it spikes, then I'm long the way I want it to be long for very cheap. So whatever your strategy is, we can help hone it to work for you. So it is, there's no one size fits all trade. I'm not very fast. Some people are in and out, in and out, and like Mary Trades is in and out, in and out. I'm like, I can't do it, but I help them do the best they can with their style of trades. So it is, it's a rewarding environment. We have thousands of members, no joke, thousands, and hundreds of them are active every day in the live room. Hundreds more are in the chat room, not in the live room, and they're not very active. They just sit there and listen. One write-up before the market opens, one write-up after or during. Today I'm late. Sunday night, you will get a video about 10 minutes long telling what's going on this week and what I think we should do. Sunday morning, you will get, well, not morning, midday, you will get a 2.5 hour video from a webinar that I did for free for you for 2.5 hours, a couple hours before that. And trade setups during the week. What else? What am I missing?
Yeah, I think it's important, Nick, to note that, I mean, even though it's a lot of trading the whole day, there's other things that you do here, like, and I think, you know, I don't think you've mentioned it, but the technicals. You help a lot of traders with technicals, with charting analysis, right?
Yeah. So here's the funny part about charting. I am not a chartist, but I put my skills against the best of them. I kid you not. It is such a simple thing. They overcomplicate things. Oh, I want to do this and I want to do that. Your tool is not good. My tool is better. Okay, so if there's only one truth where price is going, your tool better be saying what my tool is saying. And if you're good at your tool and I'm good at my tool, we should be saying the same thing. So this is where you better pick a few tools and specialize. Look at my charts. There are not a lot of tools there, right? So I have these here. That's volume profile. I am using this tool that is given to me from harmonictrader.com. The Harmonics, this green form and this red form and this red form here. So they're not foolproof, but they're amazing. They're amazing tools. So mathematicians figured out that when you have these ratios, and the ratios I'm talking about is the ones you don't see, like this thin line here and this thin line there. When they say if point A, B, and C, they're aligned kind of like this, expect a rally back. And they give you two zones. It's not a rally. It's not like get long. It's start looking for longs, right? So I do have that tool on there because it makes us money on a lower time frame. A lot of money. So
Walter has a quick question here for you, Nick.
What's up, Walter?
Can someone benefit from this room with a small account of about 2K, or is there a minimum account size to start in the chat room?
So if you want to learn, why don't you learn with fake money and don't use your money? You come in with a 2K account, use your money to educate yourself. And when you have enough money, then start trading with real money. My trades can be done with a $2,000 account. It's a lot harder though. You just take fewer contracts. So if I offer a trade where I say you collect X percent, 50 cents per contract, then it means more to your account at 2,000 than others. So if I had $2,000, I would spend it on education in order for me, when I have better, you take $2,000 without any knowledge, you're going to blow through it pretty quickly. I'm not a trade alert service. My benefit is showing you how to do this for a lifetime successfully, how to develop professional type habits and avoid the mistakes that everybody does. So I can help you and I hope to God you use fake money at first I would rather save money to have a bigger account to start trading something I know well than to ditch 2000 and try to learn with real live money. If you're most brokers have paper trading accounts. If you have with Thinkorswim, they have a paper trading account. E-Trade has a paper trading account. You can open an account, you put your money there, and use fake money until you prove to yourself that you can do it. And if you can, then you use one contract. And if it works, maybe you go up to 2 or not. I tell you what, if you do the SPX trades with me, you would have made $50 today, $60 on Friday, $110 on Thursday, $100 on Wednesday. I'm going backwards. I think $50 on Tuesday. So every day I share a trade that makes either $50 or $110. And what you need $400 worth of risk. So in the $2,000 account, that's a lot of risk. You're risking 25% of your portfolio on one trade, roughly. So it's doable, but I would rather you learn a little bit more, put another couple of grand on it's up to you. I will teach you how to do it. I will show you how to do it. If it was my son, I would tell him, sit with me and learn it. And then once you have a couple of, you have a bigger pad, so you can make mistakes and not say, oh, I just got blown out today. I do not want to see that happen in one of my guys or girls. I got blown out. I blew up so many accounts, they say. I hate that.
Well, it's pretty unfortunate, Nic, but that is the reality for a lot of new traders when they start, right? So the market will charge you a tuition, Walter, and that tuition could be unlimited. It could be permanent. There's people that have been trading for 20 years and they're still down, 10 years they're still down, and that's really why the education is important. Definitely, Walter.
There's a proper way of taking a risk. We didn't start there. I usually start with how to take risk. So with options, we're lucky because people make fun of options traders because they do it traditionally. They have in their head, oh, these guys gamble. They buy this and they buy that and they get blown out. Oh, okay. So we sell to those guys that buy this and buy that. Or when we buy, we're smart about it. So it's very easy. Options are leveraged. So if you get it right, you make a lot of money. If you get it wrong, most people lose a lot of money. Okay. So I take more, less risky bets, more calculated risk, so to speak. So which means that you have to be able to define risk properly. So the way we define risk is two ways. One, how much can I lose? This part everybody knows. Oh, I'm only willing to risk $1,000 or $2,000. Okay, so that part is easy. But here's the challenge on that part. Don't add. You decide $1,000 is your maximum power. Don't add. Oh, it fell on me. I doubled down, or a dollar cost average, and now they have it. They say I DCA'd it. If you're saying I DCA'd it, that means you lose enough that you come up with an acronym. Do not DCA, please. It is a loser strategy. I do not know one professional trader, successful trader that does that. You average in like I did. I knew I was going to have some losses, maybe. So I only entered a portion knowing I was going to double down, but not increase my risk. My risk was finite. I took a piece and I put it to work. I don't take my risk and then price goes against me. Now I double my problem. No, that's wrong. So the first part, you determine how much you want to risk and you use that. That's it. The second part is you determine, and if you cannot give yourself a number, then you shouldn't take the trade. You determine what are your odds of winning. So you say, I'm taking this trade, whatever that trade is, buying stocks, selling puts, buying calls, selling whatever, options, futures, whatever it is. You give yourself a percentage of success. Okay, I'm comfortable. I'm going to win. This is my odds of success. And sometimes it's arbitrary. With options, it's an actual percent that you can read off the table. The delta gives you that number. And somebody says, I own today. They asked me, hey, I have this call. Should I close it? The first question is, the reason you bought it, is that still there? And if they can't tell you the reason they bought it, then you should close it. Why are you there if you don't have a reason? That's for starters. The second part is, what's the delta? They should be able to tell me what the delta like that. Let me go check. So they're not managing their risk. If they know the delta like this, then they're managing their risk because they know their odds of success. They read the delta and it's 0.1. You only have like a 10, 12% chance of success. That's not good. Save your money, put it to work somewhere else. It's not my opinion. It's what the market maker is telling you. You have no chance, son. Take that risk off. Save the $500 that's left in the trade. Deploy it somewhere. If you want to stay long or short that position, take that leftover money and redeploy it same amount. So if you have 10 contracts up there, you have to do 1 or 2 where it has a better odds of success, closer to current price. So if you can do that, you're managing your odds and you're managing your money. That's success. But if you take a position and you wait 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 until it dies, you're going to blow up an account. I guarantee it. I guarantee it. Unless you're super lucky, super lucky. Nobody's that lucky. And these are tricky markets. Google, I don't know if you can find it. I don't know where to tell you to go look at it. I'm speaking to enough people to get the feeling that the market makers and the liquidity providers, those are citadels and, the people behind the mask. So they're confused. They're going nuts. They're unable to keep their hedges straight. So it's a very confusing market. And if that's the case, then you should be humble enough to know that, hey, I should always assume I am missing something. So you should never say, oh, I feel good enough. Let me risk 10K when your account is 20. No, no. I mean, you can make a home run, but you can also lose a home run. So not the right thing to do. I don't want to sway you from it, but if it was my brother, I would beg him not to do it. He wouldn't, but I would beg him not to do it. He's a conservative surgeon, so he would not do it. I can't even convince him to sell a covered call on stocks he owned, which is crazy in my book. It's like, you're losing so much money not doing that. Okay, sorry about that. I've been tied to this chair for hours. What else do you need?
Right.
Any other questions? Are we doing tickers today or what?
Yeah, we can definitely do a couple tickers there. I know that you've already gone over Bitcoin and all that stuff. Where do you see, because I know that you've been following this one, Netflix.
Okay, so somebody asked me about that today. Yesterday? Over the Sunday. Yeah, yesterday. So they got assigned Netflix and Roku, and they said, would I stay long Netflix and Roku? So I said, Roku is almost a no-brainer. Yes, I would. Netflix, I'm afraid. There's some good stuff and some bad stuff. So let's go to a daily and speak to it. I think it came up the other day. So in this last earnings report, they the CEO, who's usually very confident, overly confident guy, smart guy, no doubt. He delivered super bad news. Like, he scared everybody to death. First of all, they had a shrinkage, which I don't think they've had in a long time. And that's concerning enough, right? Because it's the only reason the stock goes up so high and it's so expensive, as people call it, is because of this growth idea overseas. And they came out with shrinkage. So that's what? And not only was that the case, he said it's going to get much worse later. So then the stock just collapsed. So was he bluffing? The much worse. What was that number? Go look it up. If you think that the number is going to be totally exaggerated and it's going to be bad, but nowhere near much worse than bad before, you know what I mean? So if somebody says, oh, it's bad now, and you go, oh my God, and they say it's going to be much, much worse. You go, oh, what? And then the much worse comes out and it's not that much worse. It's just bad. Then you have, thank God, and you have a relief rally. So I think we can either have a relief rally or a complete collapse again. So if I'm stuck in it, I would stay in it and protect myself. How would I do that? I would spend a few $100s protecting my asset just in case. Because if I'm not right, if I'm wrong about the bounce, then I want to know I'm covered on the way down. And if I'm right that it's going to rally to high heaven, those $200 are not going to break me. So I'll be happy to let go of those. It's like you buying insurance on your car. How much do you spend on your car insurance a month? I bet you $100 at least, right? You don't cry about losing $100 a month because you didn't crash your car. You're happily giving it away. That's the job of insurance, is to die. So I said with Roku, I'm okay. With Netflix, I would want to protect myself because of this question mark element. And I kind of had an idea he was going to poo-poo it, because in the prior report, he was humble. He's never humble. I'm like, that's somebody who's seeing some bad things coming. I would want to protect myself in this scenario. And that was a good thing.
Well, it's not like, it's not like, everybody knows how to trade this stuff, Nic, because it is a very volatile time right now, right? To kind of get this thing going. But let's go ahead and get some tickers from the chat if you want, Nic, unless you do want to cover anything else here.
You're driving the bus. I'm yours, Rodrigo.
All right. So
I'm yours because
you
help me out with the people, and you help the people out when I'm out of here.
All right.
I'll put in the work. Let's go.
Just give me your true 100% honest, real Nic Chahine opinion on the entire energy sector and policy.
Can we cuss? No, we can't cuss. Okay, I won't cuss. Here's my answer on energy. Let's go to Oxy. Okay, Oxy. My answer to every energy trade is this. My answer to, I say it so much that, look, I type 4 letters and it comes up. Here's my answer. Hopefully you can read that. My answer to every oil company. So on the way up, I'm saying somebody who's investing in energy at the highs because of what Warren Buffett is doing, I think you're going to be stuck in that position for a long time. If you're trading in and out, I'm okay with that. If you're buying, let's go to Exxon, less controversial name. Okay, so if I go to a weekly chart of Exxon, you're saying that's an all-time high. I think you need to look a little further. It's not, okay? So somebody out here stuck for 8 years. You come along and say, let me take you out of your misery. Let me take your losses, and maybe they'll be mine for about 7 or 8 years. The best way I can say it is this was not an obvious entry point. All you had to do is just look left. Just look left.
I think you need a t-shirt that says that this is not a clear entry point.
That's the easiest, most polite way of saying, instead of saying, what are you thinking? It's really, the statement is, this was not an obvious entry point. I'll tell you why. These candles are monthly candles. Every candle is 1 month. 1 month. So that's a long time. It trying and failing, right? And these are months. These are months. And that's 2014, I believe. Yes, it is. 2014. 8 years later, they get there and buyers jump in and bail them out. I mean, what? Nobody saw this coming. So what did we do? We looked at the charts and we said, hey, cool. We also have this pattern which says, look for toppy situations. And guess what? They were toppy situations. Let me see. If you look at this, these are what I call internals. What are these? It doesn't matter what they are. You can pick your own. This is an RSI. This is a rate of change. This is a CCI. I forgot the name of this one. These two come in the package with that red thing. So this is a modified RSI. So this and this, we're saying price is rising. The internals are falling. That's what they call divergence. So this pattern tells you, if you see me and you can find divergence, or you can find some prior failing levels, short. Well, in this case, I definitely had prior failing levels from 8 years ago, and I had divergence. So we shorted. And I bought a put, simple, a $95 or a $98, I can't remember, put. And then stock did this. If you know options and you own a put up here from when the price is up here and it falls to here, that's a massive win. That's like a dream boat. right? I got out here somewhere, which was also a dream boat. So my opinion is, and if I get it, all these orange things is alerts for me to try to short. So I want to short the rally if it comes. Why? Because I think what's happening to them is what happened to Bitcoin. They had a neckline they needed to hold. They bounced off of it. And there's going to be sellers here. I guarantee it. There's going to be an attempt to sell this thing. And if they succeed, they bring it back and test this. And if this fails, you've got a head and shoulders this big, and oil will come back to here. I think Exxon will be down here this year, if not down here. This is more likely than this. This is a long shot. Oxy will be in the middle 40s. Same scenario. They all look the same. They all look like a head and shoulders in the making. And all you need is what happens on the bounce. I want to short the bounce. How? By trying another put or a put spread. That would be the most least volatile, least violent way of doing things.
Right. Good take there on the energy side. And now, as far as the particular tech sector in general, right? I know the Fed is gonna be doing stuff this week. So for the folks that are trading around the Fed and the volatility, I mean, obviously you're there, Monday to Friday there, but are there particular trades around those scheduled dates that you do?
So all I care about, I don't trade headlines, because here's the way I see it. The only time headline matters to the fundamentals is when it actually changes the price action. So once the Fed told me that they are out to destroy the economy, that's the only information I need. Everything they're saying now is the same thing, only to varying degrees. That's it. So I know the Fed is an enemy. So if people rally off of a Fed, whatever they said, I was like, you guys are crazy. Unless he said, I am no longer raising rates. It's just a relief rally, don't chase it. And if they say something new, something the same in a different way, if he was testifying in front of Congress and then he testifies in front of the banking committee, same words, different day, the dip is buyable because there's no new threat. The threat is already out from like a month and a half, 2 months ago. Now they're just regurgitating the same message. Now, what's different is that this week we get GDP. There's no Fed event. He's speaking somewhere on Wednesday or Thursday, but there's GDP. This is the actual quarterly final number on the GDP. So are we in a recession? Well, if you're talking stocks, yes, the stocks recession terminology is minus 20% from the high. We are minus 25-ish. So we hit that already. Are we in a recession with the economy? There's a bureau, I forgot the name, it's got an acronym this long. They're the ones that announce if we are or we're not. And they used to have a rule of saying 2 negative quarters back to back, and we declare it a recession. Conveniently, they changed the rule that they said, yes, this is our guideline, but we still reserve the right to call it or not call it based on some other stuff we see. So now they may bless us and call it a recession, or for political reasons say not a recession and explain it away somehow. So, but nevertheless, this is the first report of 2. If we get a negative GDP number, which means the country is shrinking, good job, Powell. You just destroyed the economy you were spending trillions building. You ought to be in jail. At least be called incompetent, because he can't do his job totally. Last year, he has 2 jobs. 1, build jobs. 2, not create inflation while building jobs. So last year he said, I can't build jobs without creating inflation. But besides, don't worry about it. Inflation is transitory. Here's money, here's money, here's money, here's money. Created a lot of jobs. Now we have full employment and then some. Unemployment is down to 3.4 or whatever it is. So theoretically speaking, this is full employment for a country this big. And then this year he says, no, wait, I can't control this employment thing. So I'm going to kill inflation by killing employment. So he's going to cause unemployment. That's what he's doing. He's destroying demand by breaking us, the consumers. That's the only way he can control inflation. And we are not the ones that created inflation. They did. Only the government can create inflation because they can print money and make money readily available. We spend it, but they gave it to us. So he can't do his job. I can't believe they're not calling him incompetent. Last year, he does half. This year, he does the other half. Last year, he destroys one half. This year, he destroys the other half. What? I mean, imagine if you had a job to feed this dog and that dog, and you say, I can't feed both dogs if you let one dog starve in 1 month and the other dog starve next month. That's weird. So that was a weird analogy, but it's a real thing. That's what he's doing. He's picking and choosing. I can't do both jobs at the same time. Bernanke didn't do this. Neither did Yellen. But this guy is not an economist. He's flying by the seat of his pants. I digress. I love the guy. He's beautiful.
Nick, really quick here, Nick. Just want to give a shout out to Treble 482. Welcome to the Options Inner Circle chat room. Let's go.
Welcome. Say hello in the chat room. I will get to you sometime today.
So for all the people that are joining here, Nick, what should they expect? Like, what's a regular day in the live trading room? Let's just give them a little sense, really.
The live trading room is totally cool. I wake up in the 3s in my time in California. I forget what I wake up. Anyway, it's a 3 something. Let's say 3:20. So I do the homework and I do write-ups and I troll charts and I disseminate the write-ups by about 6 o'clock my time. So that's 30 minutes before the market opens. There be already 40 people in there. I'm not talking yet. I try not to, because I'm talking all day. It gets very, very difficult and taxing on the voice. And so then the market comes to open. Everybody's saying their pleasantry, hey, and they're cracking jokes. We have a few good jokesters in there. And then the market opens. They say, what are we doing today? I usually like some time to pass before I start trading. But on days like today, where before I get to trading, I knew exactly what I wanted to do. I saw the pop and I said, I'm shorting that pop. And I shared it and we traded it right off the bat. And then I didn't have another clear run for me until late in the day. And I didn't take it. I opted not to take it, but I told them what I would do exactly. Meanwhile, in between, I must have answered 20 different short-term faster trades on tickers I don't track. Like there was hood rallying, getting halted, rallying, getting halted. There were a couple other trades that were going on, smaller caps that I don't usually do. The discussion of how can we invest in the metaverse via crypto, and somebody told me MTTR and Unity, and somebody jumped in Roblox too. I was like, wow, I didn't think that. So now I know something new from people in the room. They educated me that Matterport, Matterport, whatever it's called, is a viable trade on the metaverse. So they don't specialize in the metaverse now, but whatever they're doing now for the real estate sector is totally it's totally doable. So I'm intrigued. It's a low dollar stock. So it's a low risk amount out of pocket that could give me a home run if that's correct. But I like the idea of Roblox better because it has a good P&L. Same with Unity if it does that. I like Unity as well for that purpose. So the discussion throughout the day is whatever you want it to be. Primary is me tracking the price action to be able to give faster traders the opportunity to make money every day, to be professional traders. They're in the room, 300 of them all day, every day. I'm going to assume that's how they're making their money. They wouldn't be there if we weren't doing a job. So if you want testimony, the fact that I have today I had 285. Last week I had 385 at the peak, Powell Day, whenever that was, maybe 2 Wednesdays ago. That was my high, 385. Normally 260 to 320. They're in there all day. So I'm assuming that they're making money. Some lose some money, and nobody posts wins without posting the entry. So they're sharing. I just shorted Google. I just shorted Amazon. I just went long this. I went long calls in Tesla. I shorted Tesla. So everybody's doing whatever. And they post wins and losses. So there's no BS. There's no noise. It's not a Discord noisy place where everybody hooting and hawing. I'm controlling the action. I'm the only one talking. Everybody else is typing. Every once in a while, we have somebody that has to talk. They can talk. And it's a very friendly environment. You shouldn't feel intimidated. You might feel, but it's self-imposed. It's not imposed by anybody else. Today, somebody said something that could have been misconstrued as harsh. I jumped in and I smoothed it out. It wasn't an insult or anything like that. But the impression, I said, well, we have a lot of those people in here. So it was Robinhood traders. So It was a generalization on that, but it was nothing offensive. So it is a friendly environment. It's somewhere where you can learn, discuss, and earn. You don't have to trade with live money. You can say, how does this work? How do I do this? How do I get into that? What does this mean? I will totally explain it. And I will be live. I will explain it with drawings. Somebody said, how does this credit call spread work? Oh, okay, let's go. Wait, SPX. I'll show you how we discussed it. There's the SPX. We'll go to 15 minutes, maybe 5 minutes. Okay, I don't remember what this is. Iron Fly, that's not today. Okay, this is today. This is today. So today we opened up and I shared this trade right there. Shorting the market at the open, I collect 50. It turned out to be 60 cents. So if I did 10, that's $600. And I said, I would also do this and collect another $500. And later in the day, somebody asked, can I do the same? I said, well, you missed on that one because you weren't here in the morning. You can do it, but here. So riskier. That was the high, riskier, but still worked out. So if somebody did any of these trades, they won 100%. But while I did this, somebody said, well, how does that work? They've never done this before. So I took sidebar about 5 minutes and explained how a credit put spread works and how a debit put spread works, how a credit call spread works. So they had an opportunity. And then somebody jumped in and said their trade, Persia jumped in and said, how would you like this trade, Nick? And she had a winning trade too. Her trade was to buy a put spread. I'm going to use this one. She came in late and they said they wanted to buy a debit put spread that's in the money already. So price was already here with like maybe half an hour to go. And they wanted to buy a put spread that's already in the money. So price has gone below it on the SPX. That's important. And it costs $395 and it's $5 wide. So in essence, Persia was buying a $500 asset that they paid $395 for because they were still, let's say, half an hour on the clock. And why is it discounted? Because if price rallies, it might go to zero. But I said, I'm comfortable that there is enough resistance that it shouldn't rally. So I said, why don't you go up a little bit, spend 420 for a bit of buffer. I don't know which one they did, but either way they won. I think they were at 3,920. So if price closed at, where are we? 3,900. Wow, flat. Good job, market makers. 3,900, then they definitely won. So it's a very rewarding opportunity to just teach everybody a whole bunch of things. So anyway, the live room will amaze you because it's hard to describe. It's friendly, it's productive, it's educational.
Right.
You pop in and out anytime you want. It's got men and women, and it's got options traders, equity traders, futures traders, a blend of everything. I have 2 or 3 new signups that are experienced traders. I can tell from how they chat with me, like before they signed up and all of that, and when they signed up, and how they chat. You can tell that that person has played the market for a long time, and they're happy as clams. And when I get that, because it's easy to impress a new person. But when a serious investor comes in or a serious trader comes in and they jump in, start sharing their own stuff, I feel comfortable with that. It's rewarding because then it's easier to impress somebody that doesn't know a lot about the subject matter. But then when you get an expert in the subject matter and they're still impressed, it's good validation. I don't try to do anything crazy to put anybody at risk. That's my number one priority. And to bail people out of trouble, that'd be awesome.
Right. No, good stuff there, Nick. So can you give us a quick, well, I mean, not quick, but like, just your overall, what are you guys looking at in the chat room overall? Like, as far as the markets levels, your theory on really where the markets can go, what's going to happen this week?
Okay. So this week, the GDP is probably the most important piece for me, but it's really not that important because it's going to say things are worse than what when they were before. And just because, for a simple reason, everybody's pulling back their spending because of how Powell scared the bejesus out of everybody, right? So somebody asked me, so what do you think the market's going to do? The market's going to go between resistance and support. That's all there is to it until something new happens. So I told you, we have room to get to here. And I think if we get here, there's going to be a dip probably to fill this gap down to 3,800, 3,830, 3,820, whatever it is. People will buy calls here, wrong. People will buy puts here and panic out of calls, wrong. And hopefully we can take advantage of that. But if we know that this is possible, the trajectory, then we know not to buy calls here, not to buy puts here, and to see if we can do the exact opposite. So I'll tell you, it's the human emotions that makes it easier to trade right if you know the human emotions. So I'm not an expert human emotions guy, but I know myself. And you get the urge to follow. That's what we do in real life. If you see people running in one direction, you just want to run in that direction. So if you resist it in the options, in the markets, you will do a lot better. Because if you chase everybody that buys an option, don't they say most options expire worthless? So if you chase everybody into one position, isn't that most options? How do you expect to make money? How do they do that on TV? The Nigerians tell you most options expire worthless, and then they go and tell you, here are most options, go buy them, which is true. You're telling me to go buy the most options. So unless you're actually the one that finds it in a report that you run yourself, if you're seeing it on TV and you go buy the most options because somebody told you that, look, you're late. You're already too late. You're already the person buying out somebody else's profits. But if you have a scam that finds a weird situation, you can take advantage of it because you buy it early enough, the herd will come into it, you get out. So that can work. But if you're chasing most options, if you see a huge position in the S&P puts and you go buy that position, I would sell you that position on that time. Or I would sell you something just below it because I know it's going to be support. So I think the market will just swing inside of a range. I think we're trying to bottom. We're trying to find the bottom. I think we have the potential to crash on headline. We have an equal potential to set a new all-time high again. What? Nobody says that. Because this is 2022, spawn of 2021, son of 2020, expect the unexpected. Nobody's talking about a new high. How else we can surprise the markets? Hit them with a new high. How will that happen? Oh, I don't know. A minus 3% GDP and a minus 2% GDP. Somebody saying to Powell, you're out of here unless you do a rate hike. I mean, a rate cut. And then we restart a QE. What do you think happened in 2018? We crashed. He said, okay, I'll restart the QE. He was raising rates and he flipped. He changed. So we don't know what's going to happen. I have two things going on. One thing is companies like Amazon went into the pandemic breakout, the February levels. They went below. Apple still 40% above. Tesla 70% above. So that's the risk. Is Amazon right? Amazon, CRM, Square, PayPal, IWM, all of those went into the toilet. Is Netflix, Roku, those are good companies. They're in the toilet. Are they right? Or is Apple, Google, Microsoft, and Tesla right, being so high above that level? Who's right? So there's room for all these gigacaps that still haven't gone down to the 2020 level. So that's the scary part. Maybe one day we wake up to headline, World War III. I don't know what it is. God forbid, some threat. Talks of replacing the president in the US. Nobody's talking about that. It's a very real threat. Who's going to succeed? Our VP? Will that raise question marks? If it does, how will the market react? These are headlines that are not baked in. Something new that actually would change the process of making money in this country. So that's not in the books. I think short of that, we've seen the worst of what Powell can do. So we're trying to bottom. And if we do bottom, prices have to go somewhere. So we will end up breaking through this. And if we break through that, this comes easy. And if we get there, breaking through that will bring an all-time high. So I know it's a tall order, but it's totally doable. It's totally doable. All you need is just a couple of conducive, not good news. Take off a threat. Right now, every piece of news is bad. The Bulls have nothing going for them. The Bears have everything going for them, and the game is still almost tied. It's like a hockey game where one team is playing with two-person down. You put those two in, you're going to win the game. So let's say here, come back. You take this out, you get back to this level here. Not going to be easy. I'm not drawing this as easy. You're starting to make progress. You fall back down, you find level, you struggle with this, you go back above, you come back down, you go to here. Suddenly you break out of here. Technically, now your target is somewhere around here. Technically, it's an inverse head and shoulders. That's your target. It won't be a straight shot. You'll have to struggle through everything here, every little bit. But before you know it, you'll be up there. So it's not impossible. It's just as likely as crashing.
Right. So let's go ahead and try something here. So in the chat, all of you guys that are listening, right, on the Zoom side and on the YouTube side.
Oh my God, we're on YouTube. Oh, are we viral yet or what?
So just let us know what you would like, Nick. This is basically a freestyle, okay? Like 8 Mile, Eminem kind of stuff. We're gonna have Nick just go on any topic or any question that you have. Now is the time, right? So put up your questions that you have on the market.
Let's go.
What you want Nick to go over, anything. It doesn't matter what it is, anything. Just go ahead and ask Nick.
I've got bruises. Do I still have them? No, they're gone.
Right.
I'm not reading, so you're going to tell me what they are.
Yeah, we're going to give the folks, I know there's a certain delay there, but once we get the questions rolling here, in the meantime, while people post whatever question they want to ask Nick, let me start here by asking you something here, Nick.
Somebody saying, do I use can you use the QQQ to trade? Yes. Yassine, yes. Iowa. What was that? Go ahead. Roman, the calendars on earnings are awesome. I've done videos on Roku, Zillow, and Affirm last year, or this last go around. They were spot on.
Okay, so we have, so Colton says 313 represent. I don't know what that is. Is that California area code, Nick?
Yeah, I think so.
Oh no, that's Detroit, right? Yeah, yeah. Shout out. Yeah, right. I think, yeah, my phone starts with 313 now. Yeah, that is Detroit.
You don't know your phone number?
No, I do know it, but it's
Ahlan, Yassine. Ahlan. Yalla ta'ala.
All right, and then, so Kevin Costello, I think I've seen you, Kevin, around here. So basically, Kevin says big tech, Apple, Microsoft.
What? Oh, charting? Okay.
Yeah, I mean, things that, remember, like just things that you want Nick to talk about, just big tech, Apple.
Okay, so
Commodities.
Apple is a money-making machine, right? So if the markets are higher, Apple is higher. So if you're shorting Apple, you're shorting the market, plain and simple. This chart here says it has room to rally to 149, which is done once or twice. It has support, which it shouldn't break unless something breaks in the indices. And if you look at it, it's just like the SPX. It has placed the bottom. It's trying to hold on. The only thing that scares me about Apple is this. What is this? So this is the world before COVID. And this was an incredibly high. Do you remember? If you weren't trading then, if you're new, if you're one of the newer traders, I promise you, this was just raising eyebrows. It was like, what is happening? And then we get the pandemic and then recovery to normal, which was nowhere near normal. And then this, what? It's still, how much is that? It is 42% above the incredibly high normal pre-COVID levels. Pretty scary stuff. Whereas, watch this, that's pre-COVID, Amazon. Look, Amazon went into below COVID high almost to 2018 highs. That's logical. CRM, I think, went lower. Same, COVID, 2018. Forget PayPal and Square. They're below the pandemic. They're below the pandemic. Like here, the world was closed. Nobody was working. And Square is probably PayPal is below that. No one's working in the world, and PayPal cannot find a floor. And it's a totally profitable company. So meanwhile, Tesla, Microsoft, and Apple, look at Tesla. That's pre-pandemic. Look at the size of that head and shoulders. I like Tesla. I say buy the dips in Tesla. God help us. God help us if Tesla loses this line. It's going to here. This much downside. So this would be really the loss, not the line. Don't short it if it loses this trend line. People do. I don't. Short when it loses, well, stop out. Stop out of your longs if it loses this line. It does have a lot of supports. But technically what happens, just like Bitcoin, just like all the AMD, NVIDIA, I'll show you AMD, NVIDIA, it looks like this one, only here. So you lose the neckline, you try to recover it, you can't. You lose this one, you go lower and you set a lower high, and that trend continues until you hit your target. Okay, so avoid semiconductor for that purpose, and I'll show you the pictures. AMD, see that? NVIDIA, see that? They lost necklines up here, and they're just trying to price them out. If you go to a daily chart, you probably see it better. See, look, headline, head and shoulders, right there. Same thing I'm warning about Tesla, and I'm a fan. This is your downside target. This is your downside target. Yes, AMD in the 2 digits doable. If they can't shrug this off, lower high trend, look, lower high, they haven't been able to stop. So they do this, until you hit a big enough support level that says, okay, we're done. They don't have to give you all of this. I don't say go to 100. I say be open to it and find where you want to catch it. This is a pretty strong support below here. So if we lose this, something is wrong in the whole market. That's a good company. And it's falling with the fall of Bitcoin, mining and such. It's not a crazy idea that that's why it's falling. Do I think Apple will what? Fill the 2020 gap via March 20? Give me a value. Give me a value. And I'll tell you what the market makers think. How about that? What is the value you're looking for? Give me the gap you're looking for so I know what we're talking about. The gap fill 2020 gap. Oh, this one down here? So you're talking 100 basically. By when? By when, TJ? Okay, let's go by October. What is that value? 100? There is according to the premiums, there is very little chance. I'll show you. Sorry about that. I didn't bring my options trades. Okay, so this is, I'll show you. Whoop. I can't show you. Okay, I'll tell you. This is a high-res monitor. It won't accept me to paste it here. So technically, the market makers, the way they price the options chain for October, they give it only a 0.06 delta to be at 100. So that literally translates. There is very little chance that Apple by 116 days from now will be at $100, like incredibly low. For it to go there, there's going to have to be a disaster. So no, you can't fill that gap without a disaster. You need a disaster headline on a level that's not Apple. I doubt Apple will do that. Okay. Thoughts on SWBI? You're welcome. Thank you, I should say. Kevin is, let me see here. SWBI. Why do I know this ticker? Smith Sin stock. That's what it is. You know, it's a hated topic right now. Are you out of stocks? Is this the one you want to trade? I don't want to trade, because here's the thing. My advantage is if you give me a stable set of circumstances, I can structure a boring trade that gives easy profits. This is the opposite of that. This is like buying Novavax and hoping for the best on a headline. I like guns because I grew up with them. I'm from Beirut. You can't get the Beirut out of me. I grew up in Beirut during the war. So I'm not a proponent of this, but it's a hot topic, and you're liable to get it's like smoking. It's like not healthcare, biotech. They're liable to get a headline on any given day that blows your thesis out of the water for no reason. Similar to, I got blindsided, to be honest, on Snapchat. I did a credit put spread between two earnings reports. I figured, okay, there's no headline risk right there. And the dork of a CEO of that company decided that he needed to update everybody on how badly the job he's doing. Meanwhile, he could have done it like 30 days earlier with the earnings report, or 30 days later with, or whatever later with the other earnings report. But out of the blue, he caught us all unprepared. So I got caught. But if you did, you could have managed out of it. Besides, it was a finite amount of risk, and it was, the loss was preconceived from the get-go. What about commodities, gold and silver? I have traded gold successfully. I have not traded silver since it got stuck. The SLV got stuck in Reddit. They cheat. I don't. I'm not in Reddit, therefore I avoid it. As they say, don't argue with stupid. Let them do what they want. Gold is totally tradable. And you have to pay attention to the dollar. It does influence it. It doesn't make it move one way or another. It just makes it easier. I did short gold during this spike, and I offered the trade. And then once it dropped, I said, well, we like gold. We were just shorting the price action. So I offered the other side of the trade, and I said I would go long gold, and that worked as well. So I think it is tradable via iron condor sorts, where it's going to ping pong inside of a range, and then eventually maybe they defend this neckline. There's a lot of support. So if gold, sometimes you can't do anything. You just set a note, an alert, which I do a lot. Question mark. So if this is lost, there's potential for this. So what do? This alert goes off. I jump in here and say, okay, get ready. Let's line up. If this happens, we want to get long gold. So I would wait for the dip and get long gold with an easy trade. Or if somebody wants to actively short it, they can. Silver, the problem with silver is the SLV ticker. The SLV ticker is unforgiving and it's choppy. And if I'm going to give you a piece of advice, if you trade the options on the SLV, only do single legs, meaning don't do a spread, and do in the money. So if you think it's going to rally, don't buy the cheap pennies. Buy the one that's already in the money, that costs a little more, because if you get the move, you don't want to get the move right and get the level wrong. Then you buy the right move and you still lose money. That's like daggers. So spend the extra buck to be in the money. So if you get a move, you're winning right away. What else? Hit me. What's the chart, Neo? You mean sure. So are you asking about Neo first? Is that what it is? So if you're asking about Neo, Ryan, thanks for that. I went long Neo and I shared it with the team, and it was an easy, boring trade that played out. I offered it via credit put spread when Neo was falling. It went under fire because I didn't catch the very bottom, but I had structured it to where it was safe enough to me that I not even look at it. And of course, it played out to maximum gains. Now that it's rallying, everybody wants to get long. Meanwhile, we're out, right? So I think Neo has a chance of fading, and it would be a buy the dip moment. So target one would be to fill this gap right here. So I'm going to put an alert here to start looking. Add alert. These are notes for me, by the way. Start looking. So I'll get that. I'll get that, Ryan. I got that part. So I expect vulnerable. See, I put that arrow already, and look, it started. Doesn't mean it's going there. Just be open to it. Okay, vulnerable. You see all these lines. These are all done by hand, by the way. Look here. I said be careful, and sure enough, there's a void gap from 2020. It could be a magnet. I don't know when I did that, but look how they came to it. Look, the comment says there's a void gap from 2020. It could be a magnet. Straight to it. Watch out. Support held, thank God. Bounce. Stop out. It could go lower. Guess what? It went lower, but bounced right out of that. This was my trajectory for it. Look at where it's failing. That's beforehand. I promise you these lines were done beforehand. Look, sometimes they don't work. Sometimes they don't work. Half of it worked, and then they gave up right here. They're at my target. So if it dipped down to here, target potential, you buy the dip. People will be panicking. You buy the dip. If you're a trader, why? Because remember I told you maybe they're building an ascending channel because they bottomed. Wouldn't that be beautiful? Buy the dip, and then you recover. So that's how you build a bottom. I'm not going to put it there because I don't want to claim that I drew it ahead of time. Okay, so the question is, what are these bars? If you know, everybody knows that these bars down here represent volume, correct? These volume bars tell you when something happened. These bars here tell you at what level they happened. So quickly I can look and I can tell you that 20 and a half, $20 is the most popular spot. So when it falls into it, it's going to find support there. So that's the bars on the left. And sometimes they change colors like blue and orange. I don't pay attention to it. Other people do. I think that denotes uptick versus downtick on the volume side. So I'm going to give you a piece of advice. If you are a person who wants to add more studies, it is worthwhile for you to delve into it. It's called volume profile. I would gladly teach it to you if you're part of my group. But the concept is very simple and very useful. Think about it as traffic jam. Think about it like if price is falling, one side is overcoming the other, like sellers more than buyers, or weaker. The buyers are weaker than the sellers. So then it hits a level where both buyers and sellers love it. Not opinion, fact. This line, this area, fact. It's the busiest. So if there's an uneven action between sellers and buyers, they hit a spot where historically, based on what I'm seeing on the screen here, it doesn't look further back. It's showing you what on the screen. It will bring them in. All the people that were active here, or machines or whatever, all the traders will get active again. So if there's an uneven path, they hit a cushion and then they slow down. It's like a cushion, not a hard line in the sand, more like a soft landing. Sorry about that. Study worth learning, volume profile. This here costs money, that W you see. It's expensive, but worth every penny, if you know how to use it, every penny. How do you apply it in your charts? Ryan, this is TradingView. You need a pay plan for that. It's not free. It's not expensive. This is not expensive. I forget how much it was. I'm sorry. I'm sponsored by them for like 9 years. So I don't pay, but I believe it's like under $20 a month for that. Very useful. And if you use Thinkorswim, it's free in Thinkorswim. It's included in the platform itself. So it is a tradable, it is a useful tool for trading because it tells you, let me see if I can give you a visual on it. A visual like way to use it. If we go to 15-minute charts. Okay, perfect. Okay, so this is the SPY 15-minute chart. So every candle is 15 minutes, okay? You see the volume profile here, how it's choppy. You see how there's one peak, and whole. Okay, so you've heard the term, there's a gap. They need the gap fill. Well, not every gap needs to fill, because the term gap, I don't think is the fact that there's a hole here. It's that there's a gap in the volume here. Look at it. That's there's no volume here, right? So there's volume here, a lot of volume here, a lot of volume here, nothing here, nothing here. So what happens if the price is falling and they lose this support? They hit a place where there's no volume. It's like a vacuum. They go whoop, straight down to here. So that there's no support. Nobody wants to trade it here. Look, there hasn't been any trades. That's a gap, right? So that's one way to use the volume profile. And if you see that falling to here and you hit a mountain where there was a hole here and a hole here, expect it to hold at least once. Okay. So if it comes down, it will do something like here and bounces and chops. And then they decide if they want to lose that. And what does that look like? Head and shoulders. Looks like Snapchat. And then you come back down to here, you would have filled this gap, and suddenly you would have a more proper volume profile. Which indicator tracks momentum? A whole bunch. You just have to pick the indicator that works for you. You just have to track the indicator that works for you. I said the red trend line. Okay, I don't know that question. So can you rephrase, Ryan? Anyway, so another point about volume profile I want to point out, since we're doing a lesson about technicals, we do this all day, folks, by the way. It's not all about options. You want to become a better trader. This is what makes you a better trader, these discussions. So look at this. These are session volume profiles right there. You see them very, very faint in the back. They look like this, only tiny, because it's for this piece of time. And this red line tells me for this little piece of time, this is the line that matters. For this piece of time, line here, line here, line here. So clearly that line matters. Here are two. These two matter. Here's only one. That's one matters. So this is one. So a quick look, I can tell where are the lines that mattered on different days. So plenty of information in the charts. And this is the one place where you don't have an idiot opinion from CNBC. Do yourself the favor, turn CNBC off. You do not need to. They are not there to make you better traders. They're there to sell your eyeballs. That's all. They want you to watch so they can sell advertising so they can make money. They're not evil. That's their program. They're not there to give you good trades. Absolutely not. They're there to give you clicks, for you to sell their clicks. So you will not gain a lot of knowledge. You could make money, but by pure luck. They're not there for your best interest. Let's see. I mentioned red lines were drawn by a program called Harmonic. Okay, yeah. So that, I think, what was it, a daily chart? These patterns, they're called harmonic patterns, and there are a whole bunch of them, and they have rules. The rules look like this, if you're curious. This is a table. There's an alt bat, bat crab, gartly, barfly, deep crab, and shark. So you can either study all these relationships and learn how to draw them, or you pay for the program and it'll do it for you on the fly. There's no way I could study this and become good at it and do what I'm doing. So what it does, it provides you with the opportunity to make money. It's not a trade alert. It's called Harmonic Trading. And the company I deal with is harmonictrader.com. harmonictrader.com. What's my take on XBI? Tara, we went long XBI just before the pop for several reasons. It looked like a double bottom, and it's a long time low, really strong bounces every time, really good fundamentals. The companies inside the XBI are solid. I shared a long opportunity. Maybe I have drawings as to yep, I do. Risk down here, risk up here. This was my projected path. It's already halfway through my path. The trade is already profitable. And I had given them I said, you get long, but you stop out. What is this? Oh, that was one of the trades, the setup for this guy right there. So that was an easy win. What is this? And that's the upside part. So if somebody bought this call spread, cost, I believe, $150 per contract. I checked it. I think it was 260. So you invested 150. Now you have an extra $100, $110. That's a big win. In fact, if you did both, you didn't invest 150 because you collected money from this. So the investment is like under 100 for one contract. So depends on how you did it, the balance between the two. So that's XBI. So if I'm long XBI, I expect resistance at 80. Why? That's prior fail. So there's going to be sellers here. That's why I put a dip. So I expect a dip. So I'm not going to put charts here. I'm going to do my own lines here. So I expect some resistance over here. So if they do this and they fade and you miss the trade, you can get long again in support here. They come back, they take this prior fail, which may be coinciding with this. And if you can get above it and then establish it as support, suddenly you're building a nice trend. You go back, you take out where you failed, rinse and repeat. Suddenly you've got a nice trend up. Every line is going to be tough. This is tough. This is tough. This may be tough. This is definitely tough. This is definitely tough zone. Look, I put them resistance. This they failed at, so it's definitely resistance. This box says resistance. I forget what it says. Let's go see. Clear. Go out of here. Oh. 1 day. I thought we cleared it. Clear drawings. What does that box say? Weekly pivot zone here. So if it's a weekly pivot, then it's going to be tough on the way up. Okay, check it out. You see it right there? Let's take out all the lines. It's right here, right? So what is that? 2018, they ran into a big wall, crashed, came back. 2020, crashed, came back, boom, explosion. Came back, they couldn't hold it, and now it's a roof. So expect a big dogfight up here. Where's up here? Above 90. Anything above 88, 90, expect a dogfight. So, however, your target is here. Target 1 is here. How do you get there? Like I said, choppy, build a nice ascending channel. So this is as simple as that. So we're going above and beyond over here with, talking about the service. We're not. This is what happens all day, every day. What you're seeing right here. I explain technicals. I explain trade setups. I explain studies, things to do. I ragged on our Chairman Powell, my best buddy. I ragged on oil. We talked about guns. What else do you need? What else you need? Let's bring it. I don't have anybody helping me. I think I lost Rodrigo. You and me. You're and me.
I'm here, man.
Oh, there you go.
So watching the action here. So let's see so Colton says, how do you feel about BABA? And I guess you could give your take there on China overall.
Okay,
economy.
so I can answer that without looking at a chart because I answered it today. My fear about BABA, first of all, I thought it was oversold to hell. It deserves to be like a $280 stock, and it may be up there, but I don't trust the Chinese headlines. So if BABA is rallying, the market is rallying, I'd rather bet on the market without the BABA junk. And right now, the biggest fear for BABA is the fact that Neo XPEV LI parabolic. So if they are going to dip, is there going to be a Chinese headline? Let's go with KWeb, for example. If you go to 120, so this is, let's see, 240, 4-hour chart. So just giant rally running into prior fail. I would assume they're going to stumble a little bit. Now, BABA valuation is incredibly cheap. No qualms with it. But look, it looks the same, right? These are very sharp fails. And every time they come up to sharp fails, they're failing. So I should assume, look at that. Why would you assume anything's going to be different this time? How about you don't believe them this time until they show you? As the guy says, show me the money. Show me you can break out and then build an ascending channel. They haven't been able to. Look how bullish that was. Failed. Look how bullish that was. Failed. So why is this different now? You're betting this time is different. Why don't you wait for it to be different and miss out on a little bit? It's going to here if you can. Just let it. Don't be the chump that believes it this time. That's my opinion on BABA.
Right. And now you have been, you trade all different kinds of stocks, right, Nick?
Yes.
So for somebody, let's say that is not, that doesn't trade spreads, right? That maybe likes a little bit more active, right? Maybe likes to day trade options or swing them. What would be the best way for them to use pretty much like your expertise here?
Avoiding mistakes, avoiding the easy mistakes, not buying calls at the wrong time, not capitulating out of a position at the wrong time. not using the wrong contract, trading willy-nilly without any foresight to what like you felt like buying a call or buying a put. So I say, why are you buying a call? I don't know, I thought it was going to go up. But why did you think it was going to go up? I mean, I would never deploy risk unless I had a specific reason. Like I saw, okay, one point over another, or I heard something about somebody releasing something. Like this week, I think NIO or other EVs are going to report on deliveries. So if you think that NIO is going to report on deliveries, will they trade in sympathy somebody like Lucid? So if you're taking Lucid longs based on the NIO headline, look into it, please verify. Then, okay, I get it. You're trading NIO indirectly using Lucid stuff. I mean, vice versa. You're trading Lucid using NIO stuff. I get it. That's doable. But if you just felt like it's going to go up, yeah, you can get lucky once or twice, but that's not a way to make a living for a lifetime. If you want pro habits that are consistent, you have to do pro things. And the pros do not wing anything. The ones that do are not good. So how can you use my stuff? The worst way of using my stuff is if I say, I think the XBI is going to get to 104, and you go out and buy a call and don't do anything about it until it gets to 104. Those are going to be, you'll be just like anybody else. So if you joined one of my programs that are starter programs where I only share just a simple buy a call or buy a put, make it your goal to move up and get into the chat room so you can actually start selling stuff to other people that are buying and losing. Buying, by definition, will put you at a losing advantage. Statistically speaking, most options expire worthless, and you only buy them. Therefore, you're going to lose more often than you win, unless you're really good at managing. How do I manage? If I get a 10% win, I'm out. Thank you very much. On to the next one. Some people hang on to 20, 30, 40% wins, and they ride it all the way back down to zero. Like, okay, I lost on the trade. Okay, well, did you have an opportunity to get out with some greens before it turned down? Plus, in a trade environment that does this to excellent stocks, imagine buying calls and nothing but calls. You would be hurt. If you're buying puts, you're doing well. If you're buying calls, you're not doing well. If you're selling put spreads, you could be doing well. If you're selling call spreads, you definitely are doing well. If you're selling RN condors, most likely you're doing well. So selling spreads is the best way to utilize my expertise, because then I can tell you, okay, I don't know if it's going to 104, but I can guarantee you it's not going to 61. So I take a bet on the 61 not coming to fruition. Easy. Versus saying, oh, it's going to be 104 within 6 months or 6 weeks. That's a tough call. What is easier, for you to guess where Apple's going, or for you to say Apple's definitely not going to 100, and then you make money off of that? For example, that one scenario where somebody said, do you think it's going to fill the gap? Okay, how about, let me ask you this. Would you buy Apple at $100 per share if I pay you $100 today? Would you buy 100 shares of Apple at $100 per share? It's currently 140 something. Would you take my money if you promise to buy my shares at $100? Answer yes or no. I'm waiting for nobody. Silent. Crickets. I'll answer for me. I'll buy it at 100. Sure. And you pay me $100. Yes. Yassine says yes. Tara says yes. Tara says yes. So yeah, if somebody sells a $100 put that has 5% of being there, Apple has like 5 to 7% chance of being there in the next 116 days. You can collect $100 today for that promise, $120 for that promise. All you have to do is just collect the money and sit and wait. If they don't give you the shares, the money's yours.
Yeah.
How easy is that?
So Rodney, Kevin Costello, Colton, they're all saying hell yeah.
Hell yeah, yeah. Because they're smart people. For example, you can do the same with Tesla at $300, and you can get paid like $1,000. I don't know the numbers; they're not in front of me, but I'm going to estimate. But Tesla is riskier than Apple, and it's still $300 a share, and you have to be able to buy 100 of them at $300. So if you can't, don't do that. But with Apple at 100, that's a freaking bargain. Really? So technically it could happen. I just showed you it's still 40% above the level, and that level is in the 2 digits. So if it goes back to 2020 highs, it's in the 2 digits. So it's doable. A market crash will get it there. Unlikely. And if it does get it there, it's not a big deal. I'm pretty sure I can wiggle out of that position with no damage, if not with greens.
So I guess it's important to also mention that risk management. I remember there was this one guy, and probably happens all the time, that posted a screenshot and said, "Hey Nick, I'm doing this spread or whatever," and turns out it was a totally different trade this person was actually doing from what he thought he was doing.
Yes. Avoiding mistakes, that's one of it, right? So having the chat room, and if you're uncomfortable taking a trade, and this one time I got sweat by somebody sharing a trade saying, "Oh, I just did this." And it's like, "Oh no, you let it expire in the money." I was like, I'm going around in circles trying to see how we can contain the damage. And then at the end, he tells me it was a paper trade. Like, oh, thank God. So anyway, so it was lesson learned with paper trades. But what you're talking about is a couple of other situations that happened about a month ago where somebody was trying to close a Twitter trade when the Twitter headlines broke out first, and they owned a call, and they were trying to close out of the call, and they went to sell the call to close the position, and the platform was telling them you're taking unlimited risk. So I said, something is wrong and you need to make a phone call. I said, I wouldn't push the send button because the platform is thinking you're shorting Twitter outright. So you don't want that liability. I said, where's the rush? Just pick up the phone and make the call and see what the heck is going on. Let them close it for you on the phone. So then it's on their they take the liability. If they made a mistake, then they have to cover you. So that's what happened. I don't know why the system was treating it like they're selling a call naked, which means that you're shorting the stock outright. I said, I would not send that order. Okay, Yassine is asking, in my Apple example, if I sell a put and Apple goes below 100, how do I protect myself? Well, you could close the position, which I wouldn't, or you can buy a shorter dated put to temporarily protect yourself. I'll give you an example. I sold a $9 put in X US Steel in 2020. It collapsed to 4.7. So clearly I was wrong. But on the way down, like a couple of days after I sold the put, I bought an $8 put for pennies shorter in time. So then the stock crashed and I still owned the protective leg. So I made thousands off of the one I bought. And then I waited and they didn't assign me shares. And the stock rebounded and they didn't assign me shares. So I bought my position back and I made thousands off of the one protection leg I had. So you can take the shares and sell them, or buy a put lower to protect yourself from the holy crap moment. So, and the puts, if you buy them shorter in time, they're cheaper. For example, if I sell an October Apple call and I expect, oh my gosh, maybe we crash in August, and I go to August, the Apple put is 40 cents. So if I'm that nervous, I can buy the put at 40 cents or 95 at 27 cents. So if Apple goes to 80, I'm covered. I only have, $5 of risk and I'm collecting one. So I'm really have like $3.75 of risk. And that gives me 53 days of sleeping, knowing, okay, I'm okay. So there are ways you can do it. You can't protect yourself 100%. If right. Then you can do that, then why did they pay you a reward, right? If it's not risky, there's not a reward. You have to take a risk somewhere. If you can risk Apple at 100, yes, all the time. So
okay, and we have a good question here from Abdul in the chat. Basically, if you provide help assistance with how to scalp options better and that sort of strategies.
Yes. So I say, so when I'm in the live room and I say I would get long here to here, and somebody jumps in and say, which one do I use? And it's like, okay, it sounds like you're not that fast, so this is not for you, so practice. So Abdul, you're going to have to be in my live room for me to guide you into trading fast. Like this afternoon, I rarely do it. I say, get long here, get out here. I rarely do it that way. Now I say to myself, this is where I would buy a call. And then if you spend 5 minutes, ask me which call, then you're not ready to use real money. So this is where you say which call, you take notes, and you say, okay, next time I'm ready to find out which call. So you need to be in the live room. If you want to be a fast day trader, scalper, you need to be in the live room, because I'm there and I have 20 other people that are capable of running their own rooms, basically, that are there as well. And if I don't catch it, they do. Like they go in and say, I just shorted Google, or I just shorted Amazon, or I just went long this, I just bought a call in Tesla. And some people say, oh my gosh, Tesla beat the crap out of me today. So I say, stop trading Tesla. Here's the best advice I'm going to give you. Pull up your history for like a year and stop trading anything that caused you nothing but grief immediately. Quit it. And I have tickers I don't trade anymore because of it. And also concentrate on the ones that have worked for you. Just stick to the ones that you've won with, because clearly there's a relationship between you and that ticker that doesn't work in one, that works in another. And see if your success ratio goes up. Ignore the ones that you want to trade because you hear them on the news, or you love to, but you end up losing every time. What? The TLT, I used to love to trade it, and I found out that I'm losing money on that thing. I quit it. I don't do it anymore. Caterpillar, same. I'm done. Booking.com, I'm done. It's too choppy. Shopify, up until recently, I hadn't touched it. And then I did a couple of good trades on it. So it's important to be honest with yourself, with your skills, and what works for you and what doesn't work for you. I'm running out of energy here. We've been here for 2.5 hours.
About there. Have a big shout out there for Nick. No, absolutely.
What? 2.5 hours? Wow. Oh, 2 hours and 15 minutes. Okay.
It doesn't feel much to you because you do it in the chat room 9 to 5.
Yeah,
like
no, this was fun. These were different questions. You had a good crowd there today. I appreciate it. Hopefully we get a few people out of you. I promise you, the value is there. The effort is there. I guarantee it. Nobody says that. I guarantee you will be a better version of you trading wise in our program. I guarantee it. And if you don't feel it in the first 7 days, they'll give you your money back. So I don't work for Benzinga. I work with them on purpose. I choose them because I know what they do. And we've been together for over 10 years. Good relationship. We're doing well. So, and like I said, we can't be doing crap if we have 300 people willing to spend every day, all day, months at a time in a live room with us. Aren't you just curious a little bit what goes on in there?
Right. Yeah, and folks, it's a 7-day money back guarantee for just for everybody, to kind of keep that in mind. And
again, I'm switching not because I'm a tweaker, it's because I have an incredible neck ache and I'm trying to just contain myself here.
Or the bang, maybe. But
no, the Bang. I bought a whole can. No, here it is. Sponsored by Bang. No, I'm not sponsored. If you know them, you want them to sponsor. Yeah, I would like them to sponsor.
They should sponsor you already by this point, man. It's like, guys, you gotta email Bang and let them know this is just unbelievable.
Or maybe Benzinga should send me the Bang.
They should put like your face there on the can. Like options trader.
Costco has a good deal. If you like that drink, the cheapest place is Costco carton.
Yeah, and well, look, Nick, we've been here for some time. You're right, man, and you've been there in the chat room. Let's get some closing remarks here on your end on the markets and what you will be looking for in the chat room tomorrow, right, as this trading week unfolds with the Fed and the GDP and whatnot.
They're going to be chop. I anticipate maybe a slight up open. Don't chase it. They're going to chop. Get ready to act after the event. Because the market wants to breathe a sigh of relief when the BS is gone. So regardless of what comes out of it, unless it's shocking revelations, they just breathe a sigh of relief and they go, let's go. We're done with that bull crap. Just be ready, be nimble. Yassine is pushing me on the QQQ. I don't see the futures.
My bad. You can change it there.
No. I don't need it back. But what was I looking at? I was looking at something and then it disappeared off my screen. There it is. So what you did, it just popped on top of my screen. So let me see here. Yassine is asking about the QQQ. When? October? You wanted to buy shares. Okay, so Yassine, you can buy shares. At least time is not an issue. Whether it's going to go up, how high do you think it's going to go? You said you're asking if it can reach 200. Wait, what? You mean fall to 200? Wow, that's quite a dip. 200, according to the market makers, there's no chance, very little chance it's at 200 in 116 days. So it's not a realistic expectation without a disastrous headline of sorts. Fair enough? But I can't tell the future, friend. So I will help you navigate the path to 200 or not, then to actually try to guess where it's going to go. All right, folks, I got a bolt. I need to walk, feed my dog, drink something.
All right, big shout out there for Nic Chahine, lead trader at the Options Inner Circle chat room.
Awesome. Thanks for this, Rodrigo. I appreciate you. I appreciate it.
All right, no worries, dude. I'll see you in the chat room tomorrow. That is, it's a shining light in these markets. Thanks a lot, brother.
All right, later, bye.
All right, and folks, I'm going to show you really quick the chat room, a couple things, and maybe a video here from Nic, right? So this is the live trading room just for you folks that just joined. And these are the recordings and posts that Nic Chahine is putting up there, right? So if you want to watch a couple of them, I can play some of them here in a little minute. I just have to go over something really quick for the people that just joined, you know? So this is your main chat room, the blue one, and just make sure that you go to these two channels. One of them is the Inner Circle chat. The other one is Nic's Important Messages. And in Nic's Important Messages, that's where you will find the link to join the live session. That is Monday to Friday, 9 to 5, sharing the screen. And this is how it looks like. It's about 8:30, you see 8:36 a.m. So this is how it looks like. All the indexes and the futures will be charted for you. You see the live session there? That's where you click to join the live session. And this is the spreadsheet where pretty much the 140 tickers that Nic does every Sunday or more, depending on what you guys put in there. And these are the education videos. You should definitely get onto these. Again, just available for the Inner Circle chat room members. So let's get here to see what Nic is talking about really quick here in the chat. And if you have questions about the chat room, we'll post the contact there so that you can send your email or you can call me, whichever one's fine. I don't mind. Keep in mind, we are closed right now, but I'll still reply to your email, maybe call you. All right. Okay. All right. So let's go ahead and see what videos we have here. We have strategic market. All right, let's take a look at this.
Hey traders, Nic here doing some strategy, thinking out loud here. A lot has happened. This is the look at the S&P future. So basically think SPX as to how Friday ended. First of all, the score was incredibly bullish, maybe a little bit too bullish for my liking. I was on board for here. But then after being up 2.5%, what was the need for that last burst? That happened a few weeks ago and it didn't end well after that. Hopefully this is different this time. I'm not saying we're going to fall. I'm just saying this is behavior that happened a few weeks ago. This last burst went against the data. So I have questions. I had those same exact questions about 6 to 8 weeks ago. I can't remember exactly when. It was a Friday. Reddit took over the SPY and took it to high heaven. I think this happened this past Friday. So that's 2 times in months. I will be reserved with it. I do have a few pieces of information that were on the good side. It seems like the internals, the count of stocks with rising demand exploded higher. So this is underlying strength. I'll keep tab on it to see if it disappears again. It disappeared before this last dip. It went from 120 down to like 4 or 5. Now it went to like 160 out of nowhere. So even though the overall sentiment, people feel bad about things, there is actual the number of stocks with rising demand increased out of the blue. So maybe a lot of people are saying, hey, I see bargains, let's get back in. Reserved optimism. How about that? Reserved optimism. So let's talk a little bit more top line. So this is the SPY, which represents the S&P. It's a daily chart, nothing tricky about it. I want to make one simple point. To not short too harshly, because this drop was unlike anything I've seen in years and years and years. It's very harsh, unusual, and there was no change except rhetoric. It wasn't a war, it wasn't actual deterioration, it was just people scaring people with words. Jamie Dimon saying whatever he said, Powell saying whatever he said, and just everybody imagines the worst, and 20% or whatever the fall was out of the market. Now we recovered about half. So expect the unexpected. The VIX is still 27. Why is that? Okay, if things are all clear, why is the VIX so high? The VIX represents the fear of market maker. The market makers that actually take all the risk in the markets. If you're buying options, you're buying it from somebody who's selling it, making the market for you. They're pricing everything high. That's why the VIX is high. So they have questions. If they have questions, I still have questions. Okay, so that's the stupid way of looking at it. I shouldn't be too comfortable buying up like everything is going to high heaven. Maybe it does, maybe it doesn't. And I have a feeling that we could run and then we're going to have another drop. So be ready. So when the drop happens, if it happens, how deep does it go? Does it fill this gap? So why not come up to here and then come back down to here? So expect it. Look, rally, drop, rally, drop, rally, drop, but stop making lower lows. So stop above here, stop here. Then I'll believe you that the next rally will be higher low, and then suddenly we have a recovery. Okay, so that's how it happens. The bottom shouldn't be a V-shaped recovery. It should be a process, a bottoming process. First thing, stop making lower lows. They didn't hear, they didn't hear. They rallied here, they rallied here. They lost the rally, they couldn't hold the base, they fell through it. Now the base becomes resistance. You follow the logic? So if we rally here and we fall and we lose the base, we're going to come down here and then we repeat the process. My take is that we burst, we come back down and we hold, and then we ease up. That's a possible scenario. That's the best case scenario in my book. Taking this to high heaven, although we'll feel good, it just leaves a lot of unanswered questions, which we don't like, correct? Okay, as far as events,
All right, folks. So I just wanted to give you guys a sneak peek really of what the kind of videos that Nic is posting there. Again, keep in mind, that's a strategic video. There's different videos and setups like this one for the Tesla trade on 625. You also have different trades that he's posting here, again, with the community, right? Back and forth, back and forth. But more importantly, don't forget the live trading session where he's there all day, Monday to Friday. That is where he will be doing live call outs, all that sort of stuff. And this is pretty much how it would look like, except the fact that Nic will be showing his charts and talking as well with you guys there back and forth, giving call outs and all that stuff. So thanks a lot for being here, guys. Appreciate the energy, all the members here, but all the other folks that are here to learn and just try to get ahead, right? It's a noble cause. I think this chat room is going to do you a lot of good. It's going to help you get a better understanding of the markets, options, how to trade them, and profit from the volatility, regardless if the market's going up or down. You're always going to be following Nic's trading plan. And that's, part of being consistent, part of having discipline. But I'm telling you, there's a great community there that's going to back you up and help you out throughout the whole way. And that's something that, I'm really, really proud to say. The community there is amazing. So keep in mind, the deal is until midnight. It's 70% off. You get a laptop, live trading with Nic Chahine, Monday to Friday, 9 to 5, and Sundays, pre-market prep session, right? So on Sundays, you're going to meet for about 2-3 hours. Thanks a lot, folks, for being here. If you have questions, send an email. We're going to put the contact info in the chat. That is the info that you should reach out if you have questions. And the link is also in the chat. It has, you will get two extra bonus items from Rodrigo if you sign up. You'll see it after you sign up, folks. But thanks a lot for being here, and we'll see you folks in the chat room.